Let's get this going.
Let's go.
Oh, we are live. The intro didn't play, so but that's
Yeah,
fine. Don't
it
worry.
did.
Oh, it did play.
It
It didn't
played.
play on my end. Oh, that's strange. All right, maybe it was my connection. I don't know. But yes, hello everybody. We are live for another session. I'm joined again by James, who the viewers I'm sure are aware of by now. And yeah, we should have a good Friday opening session, hopefully. Fingers crossed. How are you doing today, James? I hope the week's been good.
Yeah, it's been a good end to the week. I've just come back from a trip down the coast with my parents, and I was busy trading along the road for a few days. And
Wow.
of course, we had those big dips in the stock markets and Bitcoin. And it's difficult at the best of times to decide whether this is a dip that should be bought or whether it's a bear market that's forming and we should be selling. So I went with the buy the dips theory, and I'm still on that idea right now. So it's going well.
Oh, good. That's really good
How
to
about
hear.
you?
Yeah, not too bad actually. It was better than last week. Last week, the bear market was pretty strong, so kind of only gave me, I could only really short the market, and I could only really do it when there was a pullback, and the pullbacks really didn't occur at the right times. A lot of time in the Asian session, so yeah, it was a bit of a struggle finding a good entry, but this week has been a lot better. So I'm happy for that. Have yet to actually look at the charts today. And
Do you want me to start off, Sam?
Yeah, please.
Shall I just go through what I'm looking at right now? It'll take me, I don't know, 15 minutes or so.
That's okay? Absolutely perfect. Yeah, right. Yeah, absolutely.
So let me start up my fire up my stuff here and get that going. Get my charts going. That should pop up if the software is working now. It's been broken for a few days, but it's fixed now.
It has.
Yeah. So so we're on. We might as well start on this chart. This is the stock markets indices and names. I've got three indices at the top here: NASDAQ, S&P, German 30, and IDWM, the small caps, and a few chosen names down at the bottom, individual names: Nvidia, Tesla, Coin, and Coinbase, Google. And let's just have a look. You can take any of these charts, any of these indices, except for the German 30. The American indices look more or less the same. So we dropped down into, I think on the NASDAQ, I think we got to like an 11.5%. Let's just check that to make sure so that we're not talking bollocks. But I think we got to about 11 point something. Actually, 14. Did we get to 14 down? Yeah. So
you're looking at the NASDAQ, sorry.
NASDAQ, yeah. So
wow. Yeah.
Just about almost 15. So the last correction we had on NASDAQ was over here in July last year, if you remember. That was 15%, and this is almost 15%. And also the structure is very similar. It's pretty much straight down with, as you were saying, Sam, no pullbacks really. Breaking down through the trend line, through the 200, into the order block, incredibly oversold, lots of fear. The fear and greed index is off the scale to the left-hand side in the fear part. And whatever index you look at, whatever oscillator or measurement you take, we're probably due for a bounce. So having said that, where could we bounce to, and have we got any indication of a bounce so far? And we do actually. Let's have a look at what's happened over this last week. We had a Dragonfly Doji that was on Tuesday. Monday was a big day down, Black Monday. Dragonfly Doji, a higher high and a slightly bullish candle on Wednesday. Yesterday, a bearish engulfing candle, but recovering slightly towards the end of the day. Same on the S&P. And today, gapping up just fractionally. We might have to close that gap. It's only a little bit, maybe, I don't know, 30 points or something. We might have to just close that gap. But if we do, I'll be looking to add some more. I'm long from these two positions. These are my swing trades, not day trades. Right. So we're out of the money on that one and in the money on that one. And I actually want to add some more on a dip down on intraday dips today. So if we do get a gap close, and that would take us down to, I'll give you a precise number, and it might align with what you're doing there, Sam, 19,276, which I would round to 19,280. I like the 80s and the 20s. The market often reacts to those. So I'll be looking to add to my position on a dip down there, and you may well find that you get an intraday day trade confirmation on that yourself if you're trading those.
I really hope so. I don't trade the NASDAQ, just the S&P, but
okay,
like you said, they're almost identical, right? So
yeah. Except on the S&P, there's no gap. There's no gap on the S&P. But if the NASDAQ just does gap down a wee bit, we could just get a little pullback in the S&P, maybe down to the top of Tuesday's candle. I mean, the bottom of Tuesday's candle or thereabouts, and that's on the S&P. Depends whether you're trading SPX or the US 500 or the futures or whatever you're doing.
The futures, yeah.
Try and align it if you're watching with whatever you're trading. But on my chart, down to the bottom of Wednesday's candle rather, and that's at 554. Let's call it 5550. So that's only 20 points below us. So if we get a dip into that, I'll add some more into that too. That's my idea for today. So I think we've got a really good. Basically, I'm just saying I'm hoping for a really good bounce today, and I think we're due one. We're in the order blocks. You know, all the things I mentioned early, set up for at least a bounce. Now, I want to say one thing. Am I bullish or bearish on the NASDAQ and the S&P and the German 30 and all that sort of thing? We'll talk about the German 30 shortly. Not really. I mean, we've broken down through the channel line. We're down below the 200-period moving average. We've had a 15% pull down, which needs a bit of mean reversion or a bit of a bounce. But we're now actually heading towards a bear market, particularly if we get past 15%. Then we're out of correction territory and heading into bear market territory. So this is such a critical level. But what I think we could get, and quite easily, is a bounce back up to the 200-period moving average. That's a good start. In fact, we can start with the channel line. Look how long this channel is. And we could get back up to the underside of the channel line. In fact, I would say we almost certainly will. It's not normal for us not to do that. And I think we should retest that and then fiddle around there and maybe even back up to the 200. So it would look something like that. If we test the channel line, this should be something like that. Or we could get up to the 200, which is over here, and then, you know, fail, or even the top of this. So, and there's the 20-period moving average. So all in this sort of area at around about 2,300, 2,400 could be a rejection zone for a continuation of this move down if we're in a bear market. If we're not in a bear market, we'll probably just blast right up through all of these levels in a few days and start moving up to new all-time highs. And that could happen super fast. As you know, rallies in bear markets or corrective markets tend to be quite dramatic and vicious. So anyway, I'm going to stop right there, Sam, and let you have a look at your charts because I've got, unless you want me to carry on.
No.
About stocks, or I can go into other instruments. Up to you.
I'll have a quick look at mine, and then we can go back to yours on other instruments.
Perfect.
So I'll hit present. Share. And there we go. All right, we're up. So yeah, we dipped into like an area where there was a gap in volume. So I'm always interested in those areas. It seems to have rejected it today. This is an area built from yesterday's market or yesterday's session, so to speak. There is another area down here. Don't worry about the different colors of boxes. That's just me. That's just me, you know, not bothering to change the colors to be all uniform. They don't actually mean anything different, the different colors. That's just, I should probably be a bit more organized with how I lay out my charts. But so again, I'm a bit, it really depends. I mean, it's really hard. I mean, every time it looks like we are entering a bit more bullish, the bears are just coming again in the last week and the week before. So I'm a bit hesitant, even though we have had a bit of a push up. And, you know, the sellers try to take over here again, and it looks like they're trying to take over again. I'm hesitant to kind of call it, you know, oh, I'll be looking to buy. But theoretically, with my strategy, I would be looking to buy around this area here again, where this volume just drops off from the point of control. Potentially even here, there's another gap in volume. So there's a few areas where potentially it could be a nice opportunity to buy. but it really comes down in the moment. I'm definitely going to wait for the US Open. I'm not looking to trade right this second. So another 5 minutes. We do have some news coming out. It's not the most major, but that's coming out at 2 p.m. So half an hour, 30 minutes after the US Open. But I'll still stay out of it. If it's red, I just tend not to want to really trade, because even though it might not make a massive move, it can still go a little bit crazy, start wicking, and spreads get big, and I don't know. I just tend to stay away from it. Let the chaos kind of play out, and then look for a trade. So I'm not actually going to be trading until at least 35 minutes, or say 40 minutes. But in terms of selling the market, we're at a point where I would have wanted to potentially sell. So we've already hit it. We're rejecting it now. Unless it can kind of break even higher to this point of control a few days ago, where there was a lot of volume, or ideally all the way up to here. I mean, this is, but that's far away. I highly doubt we're going to go there today. So that maybe next week or so. But I'm only really seeing bullish opportunities right this second. There was a slight bearish one, but it was out of my time window. I don't like to trade before the US Open, but this was an area where I would have been interested selling. We've already touched it. We're pushing down. So ideally, I would like to see it get to, this lower level here, around, 5,562. Then, if we can kind of get down to there, maybe even dip a little bit below it, trap any breakout traders who are, waiting for it to break these lows, and then hopefully get a nice little push up again, and make a bit of money. But it could very easily stop at this area then, and then continue going down. Sorry, you were saying?
That's a good one. I think that's kind of exactly the level that I think we probably will get a pullback. Yeah, down into that zone.
Yeah. So yeah, I'll keep my eye on it. I'm going to set some alerts at that zone, and hopefully it pings while we're in the session. If not, I mean, the US Open could very easily, when the US Open, it could push up back to here, kind of create a double top, and then push down. So there could still be a short position potentially. So I'm going to set alerts around that area as well. But yeah, it does look like that would be kind of the area I'll be interested in buying in. Hopefully, it really depends. When it gets there, I'm going to have to look at the actual orders. If I see people getting trapped, then I'm definitely in. But if I don't see the setup, I'm just not going to enter and wait until it's clear, and until I do see people actually getting trapped. But that's pretty much it from my end at this moment in time. I've got my alert set, and yeah, it's just a bit of a waiting game right now. So awesome. By all means,
all right. Well,
you can take
2 minutes
over again
until the bell. Can I just show you? I'll show you. So at the top of the hour, we've got Michigan numbers coming out. Let me just quickly show you what that looks like. And this is quite interesting. I hope you can see that. So yeah, there we go. I think it's showing. So it's these numbers I'm interested in. Michigan 5-year inflation. This is an interest. So these are all quite new numbers. They never used to give this much detail. So inflation expectations slightly ticked up, but I think it'll probably be a bit down, because we've seen really good CPI, relatively good CPI and PPI numbers. But the consumer sentiment is the interesting one. That's expected to tick down. But if that ticks up, we could see a bit of a bump right at the open, well, half an hour after the open. And then inflation expectations, same sort of thing there, same as that. Also up a little bit. I think that might be down after what we've seen this week. And consumer expectations more or less in line with what it was last time. But I think all of these might actually surprise to the upside: consumer sentiment and inflation and so on. And that's at the top of the hour. So it's probably fortuitous to wait until then before day trading this, and wait, and also let the first half an hour settle down up the opening bell. Yeah,
absolutely. I'm not getting in before before the news.
Yeah.
Definitely not. Yeah.
So let me quickly show you what else I'm looking at the moment.
Sure.
Right, what have I done? Oh, is there a delay again? Looks like
No, I'm
it.
just gonna hit.
There we go.
Okay.
There we go.
There we go.
Okay. Yeah, so we've talked about stocks, and then the other, I went long on Tesla. For those of you trading individual names, if you're interested, Tesla was super interesting, and this might be one of the names that lead the market up a little bit. I know it's been beaten down at 60-something% down from its highs. It's not the first time it's happened though, and I've been trading Tesla for a long time, and I drew this and put it on X, or maybe it was just my private group this morning. That was in 2023. And we dropped 67% just from that last swing high down to there to $100. And Tesla then rallied up to almost $500 in the following months and years. We're in the same sort of situation now. That drop looks a lot bigger, but it's not. It's because it's a logarithmic chart. It's about the same, a little bit smaller than this drop, actually. I remember the sentiment at the bottom here when everyone was selling Tesla. Everyone hated Elon again. I think he had just bought X at the time, or it was Twitter then. I think this is when he bought X, and just like he's got involved with Doge, he got involved with X. Everyone thought he'd forgotten about Tesla, and so on and so on. And sales were not great, and he was offering discounts, and Tesla dropped through the floor. The floor being this purple line that I've got drawn across my chart, which you can see quite clearly. And guess where we are right now? We're back at the same floor. So that's where Tesla fell through the floor, tried to get back, fell down again, got up for a while, fell down again, reclaimed it, held, beautiful rally, and we're back at the same level. So I'm long on Tesla just for that reason, and not because I think electric cars are good or great or anything, or that Tesla has a massive future. I think it probably does, but maybe not in cars. But I think we should get a decent retracement, at least to the, like we're talking on the stocks, at least to the 200. And the 20 is also curling down there. Market's just opened.
Yeah.
So yeah. So so basically I'm long NASDAQ, S&P, Tesla, Coin, and Google, and that's my stock bag for the moment. I think
Very nice.
do you want to go back to your
nice.
charts there, Sam? So for the day trading charts, and I can switch over in the meantime too.
Yeah, we can do that.
Or shall I just go for it?
If I remove yours. Oh, you can go for it. Yeah, it's entirely up to you.
Right.
Do you want to? All right, you go for it. I'll have a look.
Let me get my day trading charts up here quickly.
No problem.
I suppose they're not going to load now. There we go. All right, so we got the NASDAQ. Is that showing up there, Sam?
It is, yeah.
So we got the NASDAQ on the left, S&P on the right. And let's look at the NASDAQ. Let's look at the S&P, actually. That's the one that Sam's trading, so let's do it together. So there we are. It's a 5-minute chart. Let's go to the 15. Let's go to the hour chart, actually. Draw some lines in. I don't know why my internet's suddenly gone super slow. Or maybe it's a memory problem on my chart, on my laptop.
You know what? It's happening to me right now as well. I'm thinking
it could be StreamYard.
Yeah. It's causing a lot of
All right. So here's the hour chart on the S&P. First thing, so it's very easy when you approach your trading desk, have a naked chart. There's nothing wrong with that. If you want to put moving averages and all that sort of thing, I think they're actually in here, but they're just not showing up because the chart's gone mad or something. But the first thing you can do is just draw in some lines. You can just very, very easily just draw in a downward facing trend line that we're at right now. Notice that we're testing it currently at this moment. I always like to clone it and draw a channel line, or you can use the channel drawing tool as well. It's nice here because the channel is almost perfect at the bottom in alignment with what we've got at the top. I'm going to extend that to the right-hand side. I want to extend this. Extend right, extend left, extend right. Why is it not going right? Oh, there's something down here. I don't know what this is. Oh, that's the stochastic. Let's get rid of that. I think I've got a memory problem on my computer. I don't know what's going on. I think I'm just going to shut down these charts. Let me shut down a couple of things here.
No worries. And while James does that, viewers, if you want to leave comments, make yourself known, say hello. Yeah, so to all the viewers, feel free to leave some comments, ask your questions. We love to interact with everyone watching, so don't be shy. Doesn't matter which platform you're watching it on. If you leave a comment, we can see it from our end, okay? So yeah, feel free to
cool. Sam, I think you
anything.
have to take over here, mate. I'm just going to reset my charts, if you don't mind.
No worries, no worries. I'm going to hit present. Sorry, someone in the back end's hitting add to stage as well. We got some comments coming in. Thank you guys for all the good info you always share. You're welcome, Commander SS. Sarah Walker goes, what's the best way to handle losses and improve my win rate? Ooh, discipline. Stick to, journal as well. Figure out when you're. Ow, sorry, I just had an alert hit me. It's so loud. Yeah, journal your trades as well. You can essentially.
Looks like we're going up.
Yeah, I'm just seeing that now. We're going up. We're in that area. So we did actually reject. Sorry, I will get back to you, Sarah, in a minute. So that area I drew out here seemed to be the one the buyers got into, and it did reject. I was hoping a bit lower down to this area, but what can you do? Sometimes it's. But this doesn't mean we're necessarily being bullish. This area is also a good area potentially for sellers. So hopefully a lot of buyers, this is what I'm hoping now, a lot of buyers get confident, put a lot of money on the line, and get trapped. And the sellers trap them. So I'm just going to draw out the last high. See if those breakout traders come in. So we've just broken out from it. We're actually getting buyers taking profit now. These buyers down here. So just as we broke that high, they're taking profit. But it's not huge numbers, so nothing I'm too interested in right now. I want to see those numbers bump up. We had quite a few big areas of volume there, where it's over 1,000 each. But by the looks of it, these buyers are still very much in the market. They haven't lifted off their position yet. So I don't want to be shorting the market until they actually exit. Until I see them exit, I'm not looking for, I'm not looking to go against them, essentially, because they're doing well. It's actually working out in their favor. So until I see them exit, I'm not going to be selling. But even then, we got the news coming out in 22 minutes. So, and I don't think that's enough time to really let a trade play out, to be honest. So yeah, I don't think there'll be a trade right this minute. So let me get back to your comment. Sarah, what were you saying? What's the best way to handle losses and improve my win rate? Yeah, so you gotta be aware of like what you're doing in the market, right? So if you start journaling your trades, you will actually might be able to spot a pattern that you generally have a lower success rate at a certain time, or and you got to be honest with yourself. Are you breaking any rules? Are you not waiting for all the right confluences to line up before you're entering? Start journaling, start writing it all down, and you might be able to spot a pattern. And you just have to be strict with yourself and say, look, I'm only going to trade during this window, this instrument, or pick a few instruments that you quite like trading, and you're generally quite you have a good feel for it because every instrument moves a little bit differently. And just never stop practicing, really. Don't be afraid just to be on the demo, practice. Don't try and rush the process. It just takes time, but you will get there. Mandeep says, please talk about NG. What instrument's NG?
Natural gas.
Natural gas, right? Natural gas. There you go. I think James is the gas expert. So
Yeah.
James, by all means, whenever you're ready, you can talk
All
about
right.
natural gas. And one last question,
I'm
just before we get to that.
Yeah, go for it.
I would like to start with a basic question. What are the key differences between scalping, day trading, and swing trading? Okay, so scalping is generally when you're in and out the market, I would say under an hour, right? I would say that's more on the scalping side. Day trading is within one day, all right? And you're exiting the market, or you're exiting your position before the day closes, right? Or before the market closes. And swing trading, you're holding it much longer. You know, it could be days, weeks, even months. Some people would call that a position trader then, but it all kind of falls under the same realm. So essentially, it's just how quick you are in the market. Scalping is very short term. You're looking at the 1 minute, 5 minute, 15, maybe an hour minute chart. Day trading, you're generally looking at like the 15-minute, 30-minute, 1 hour, 4 hour, sometimes even a day chart just to get the overall, direction. And swing trading, you're just looking at higher time frames as well. So that's pretty much it. And we had, want to tell me what you think of NASDAQ today? You just missed it. James just explained the NASDAQ a bit earlier, but we can cover it again, so don't worry. And two more questions. Sam, are you a day trader then? I would say I'm more on the scalping side, but generally speaking, my trades last 30 to 40 minutes. So it's still more on the scalping side, but it's kind of on the border between day trading and scalping, I would say. And what about you, James? James, what would you classify yourself as? I think it's frozen. I think James is frozen. Okay, we'll wait for James to... Oh, he's coming back.
If it's my... If it's difficult to hear you, you're dropping off a lot.
Yeah, from my end, you just completely froze. Oh, and he's dropped out. Okay, James is going to sort out whatever technical difficulties he has. He'll come back, and so for now, I will be hosting it solo just for a little bit until James comes back. I think he's having a few connection issues, so not to worry. But yeah, let's have a look at the market real quick. Any other questions? Please feel free. Keep them coming. It's always good to interact with viewers. So again, on the market right now, am I actually showing the market? Oh, I am. Yes. Good. Again, we're not really seeing heavy volume right now, and that's kind of to be expected. We got news coming out in just over 15 minutes. No one's really going to be placing big orders right before a high impact news alert, right? So generally speaking, nothing's really going to happen until before it. You might see a lot of people exiting the market, which will look like higher volume, but that's just people who are currently in the market exiting basically before the news comes out. Okay, so maybe 5 minutes before the news, you're going to start seeing bigger volume come in. That's not new people joining, I can promise you that. That's people exiting. Okay, people getting out of the market. And again, it's just logically makes sense, right? But yeah, we're not really seeing anything too great in terms of the volume. There's no major opportunity just yet. Let me look at the candle. We actually broke that high quite well. We've broken past this area. Is James back in? Oh, James, you are back.
I'm back.
Awesome.
I'm back.
You are back, and you seem to.
Yeah. Sorry about that. I don't know.
Now,
I think StreamYard was having some problems, but I seem to be being kicked
no
out.
worries.
But I'm back.
Awesome. I was just explaining to the viewers, there's really not going to be much action until the news comes out. But yeah, we're getting a lot of questions coming in, actually. Sarah says, where is Robert today? Yeah, where is Robert? Robert, if you're in, make yourself known. Come on. Robert the super fan. How can we ever...
I'm here, Sarah. And Sam's here. That's all you need. You don't need Robert. But Sam, can I've just taken a couple of trades here whilst whilst you were talking, and I also got kicked out. So can I just show you what I've done here?
Please, absolutely.
Yeah. Are you going to switch me, or do I have to do it? Maybe I've got to do it.
If you share your screen, it will pop up, and I'll be able to hit add to stage. There we go. Add to stage. You're live.
All right. So we didn't get the dips on these instruments, but we did get the breakout. So there goes. So I've actually got a position there from earlier, which I've just taken a fresh one right now on the US 500. That's the one that you're interested in. Really, very, very simple. We've got this long-term downward, well, medium-term, quite a long-term trend line actually. This is the one that I drew on the hour chart just a little while back whilst we were here. This channel, and we were aiming to break out through the top of the channel. This is the third touch of the channel, and if the third touch breaks out, it's likely to be. There's another original trade that I have up here. This is a swing trade. It's quite a large account, so these are actually very small positions. But there's one up there, and there's one down here. My target on this is actually much higher, up into. I'll just show you quickly on this chart, which we discussed earlier, is back into the 200 period moving average, and this swing low, and maybe even that swing low, which is a little bit lower, or that swing low. So I'm aiming for about 5,700, but probably more like 5,780 or 5,800, somewhere up into this region here. And we're currently at 5.5, or 5.6. So maybe a couple of hundred points move on this, and if we get going, that should be good. And the reason I took the day trade, so bear in mind that trade there's an old, well, it's a swing trade. The day trade that I've illustrated on here, simply a breakout. I was looking for a dip back down, like we both were, Sam, down into that sort of level at 5.550, just at that sort of swing low. Let me zoom in, somewhere down there, right at the bottom of this swing, and the 20 period moving average. We didn't get it. So instead of that, we just bust out through the top. So I just took the trade on the breakout. Let's go to the 5-minute chart. And there it is. There's the surge up, the failed break, and then the reclaim and long. Really as simple as that. And there we are, long. Yeah. So for a day trade, so for this trade, forget the swing trade above it. It's a couple, well, it's about 100 points above. But for this as a day trade, I think I'd be looking generally for about 50 points, and I'd have my stop loss. I'm going to put the stop loss below here right now. So normally I hedge. I don't use stops. Now there's a few different places we could put the stop loss. We've got 3 different swing lows, progressively higher and higher. But the order blocks are here, as you can see, and I'd like to have the stop loss below those order blocks. So let's see where we'd have to put it. I'll just put a stop loss in, and I think somewhere around about, probably at 5.530. Let's see how that looks once it's in. So there's the stop loss drawn in orange there. That's a $200 loss if this trade fails. But so how many points is that? We got in at 5.57555. That's 45 points. So if I go for a 50-point win, that's only a 1-to-1 risk-reward ratio, which is not the best. That doesn't worry me too much, though. It's not one of the things I normally look at in my trading. And I'm not saying you shouldn't. It's a good idea to do so in most forms of trading, but it's not something I generally really care about. But I would like to get at least 1-to-1. So I need 50 points out of this trade. So I'm going to set my TP at 50 points as well. I like to just put them in and see how it looks on my chart. So I think trading is quite a visual sort of game, and I've lost my chart. No, there we go. Okay, so I've got a $223 risk and a $200 gain if this trade moves up in my favor. And I think I'm happy with that. It's just below that order block as well, which will perform some sort of task in resisting this move up if it gets there. So I'll make a couple $100, and I'm risking a couple $100, and that's fine on a day trade for me. If this carries on and bursts up through that level quickly and just pushes through there without stopping and doesn't react to it, doesn't make a spike high or an engulfing candle or something like that, just forges through there, then I'll hold on to the trade and wait for it to get my swing trade position, which is slightly higher up over there, and then decide what to do. Probably take that one off at break even, and keep the one that I've got on now in a profit. That'll be in a $600 profit or something like that.
Right, I see. So you kind of combine swing trading and day trading, and you kind of that's quite interesting actually, because it's almost
Yeah. So
midway risk management. You could kind
yeah,
of call it,
yeah. But I'm sure you have I don't actually, funny, but I'm sure you have a long-term stock investment account somewhere. Most people do, most traders do, and it's very much like you have a long-term account on. You might have, I don't know, 1,000 shares on Tesla in your long-term account, or 10,000 shares, or 100,000, but you
I
might
wish
be
I had
shorting it on a
100,000.
regular basis.
I
Well,
wish I
okay,
had
maybe
100,000
one.
shares in Tesla.
Well, they're pretty cheap right now. That's only $1 million, right? Or 10 million rand, $10 million. So, but but you might, if you were a Tesla investor but busy swing or day trading Tesla recently, you probably would have been short most of the time, even though you're holding a long-term
Yeah.
investment portfolio. It's the same with the difference between swing and day trading. Pretty similar. But as you know, when you get into a bad day trade and it goes against you, you can always call it a swing trade and hold on for dear life if you want to.
You could do, yeah.
Which a lot of traders do that, of course. So so we're long on the S&P and long on NASDAQ. I've got other long position on the NASDAQ for my swing trades anyway, and I think these are going great. Big rally on both of these right now.
Beautiful.
Massive.
Really nice rally.
Yeah.
Really,
So
really
you see it on the day charts here too. We're about to perform an engulfing candle on the S&P and on the NASDAQ. Tesla's holding up well. Why are we talking about it? NVIDIA, another gap up and surge up toward. NVIDIA is another interesting one. Depends on whether you're bullish or bearish on this. But if you're a bull, you'll be hoping for it to break up through that trend line, the 20-period moving average, which is the short-term momentum indicator. And there's the 200 and the 50, all up there. NVIDIA's got a lot of work to do to get through that trend line, the 20, the 200, and the 50, and then the 100, and then the top trend line. And whether it can do that or not is uncertain. But we were giving it a good go. We're approaching that underside pretty rapidly, as are many of these other stocks. Apple, Google also bouncing up a little bit. IWM too. So I think it's an up day today in general. Same on crypto. I'm well out of the money on Ethereum, as you can see. I don't like looking to the left-hand side of my chart there, but it is a swing trade, and it's okay. It's not massive. But I've got quite a lot on Bitcoin. That's looking beautiful, bouncing up, stunning. I love it. I love this shape. The push down, massive thrashing around that second push. Third push, a little bit less, slightly more feeble, forming a beautiful base with a bullish engulfing candle at support and consolidating, forming a bull flag, and now looking to resolve that to the upside on a long-term, massively long-term trend line. Pretty clear. And what's interesting about this trend line on Bitcoin is that it's so clear and obvious that you'd think it wouldn't hold. It would break. Everyone's looking at it. But when I look at the charts around X and on YouTube, I don't see many with this trend line drawn in, and I don't know why. It looks so obvious to me, and the market is reacting to it. But no one else seems to have this trend line drawn in. And if they all did, the market probably wouldn't react to it and would just go straight through it. So it's a little confusing, but that's the market for you. All right, I'll hand back to you, Sam, and then I'll carry on with other. Oh, we'll talk about nat gas. I'll talk about nat gas in a minute.
Yeah, please. Someone
you want me to go
wanted
straight into that now?
You can do, yeah. Two people have actually been asking about. No, sorry.
Okay.
One person asked about NASDAQ. Yeah, two people have asked about gas. Another person, Commander SS. So go on, yeah.
All right, let's talk about nat
get
gas.
through the questions after as well.
Now, I know we can't trade nat gas at Ola, but you can trade oil, but not nat gas. But you might be trading this somewhere else. So let's have a look. And I've just done a video. I've just put one up in my own channel, so you can go and check that out too. And I've covered this exact chart in that video. So if you are following me on my own channel, what I'm going to say now is just a repeat of that, and you'll probably get bored. So don't bother with it if you've already watched it. But basically, we've got this is the current contract on the futures at the Henry Hub. We've been short on this entire contract so far. We shorted there at $4.11. We held that trade. It wasn't a full position. We added the second portion of our tranche up at 450. I think it was 455 actually. And that started to move down. So we moved into profit on that short. We got close to break even on that short. And then the market began to change direction. We immediately bounced off the 50-period moving average here on the Forex, made a spike low, reversal, wick candle, and moved up. The moment that happened, I hedged the entire lot of both of those trades, one in profit, one slightly out of profit, and took that trade all the way up to the top there, where we then exited the long position, the hedge, still holding on to those two shorts, and added another short on the confirmation of this reversal. We then, at that point, had a short there, a short there, and a short there, with the profit already taken from this big long move up. And then we held that one all the way down to this line here. We then got another reversal candle. I exited the shorts, took a long position, and that failed at the 100-period moving average. The moment it failed, we got out of that for a 1 cent profit, and we're now flat. This weekend, there are massive storms coming through the southern states in the US. I'm not a weatherman, but from what I read, it's going to be pretty dramatic and pretty dangerous, actually, by all accounts. And when there are dangerous storms like that, it can have one of two effects on natural gas supply and demand. It can destroy demand because of transport and pipeline and usage issues, but it can also destroy supply offshore with rigs and transport and all that sort of thing as well. So it's not clear which one it will destroy the most. And so we've got that big stormy weather coming up this weekend. You go and check it out on Nat Gas Weather or any of the weather channels on X, and they're all putting up this huge warning about weather. Weather's the big thing that affects natural gas in the short term more than anything else, because most of natural gas is used for heating and cooling, and therefore when it gets really hot or really cold, natural gas supply and demand equations are affected immediately. Now, so we have no positions on natural gas because of that storm, and because we took so much profit, which I don't want to give back because of stormy weather in Alabama. I'd like to keep that profit. So we've gone flat on this, and you can see it's now moving down. Generally, I'm going to finish off with this. Generally, we're above $4, above $3.75, $4. We've been up at $4.50. All of those are very high prices for natural gas, and in general should be considered as selling opportunities and not buying opportunities. So we've been looking for shorts up underneath these trend lines. There's a perfect trend line. Let me switch this very quickly. I'll finish with this to the day chart. Trend line, breakdown, pull back once, pull back twice, and short. We actually shorted that first pullback as well, and we got out right at the bottom there. So we're now playing the underside of the trend line in a market which is probably going to move down and not up. And the targets for the downside are 375. That's the sort of bullish last chance part for the bullish market to hold. And if 375 fails, then we'll be moving down to $3, and the 200 MA and the big round previous swing low and the original place that we got long at for this last move up and down. So, and it's also a very long-term trend line. So that's our target, ultimately $3, but we might have to pause and falter around 350 or 375 before we get down there. For now, though, this weekend's weather is too volatile, too difficult to predict, and there could be damage. There might not be damage, so we don't know. And it's probably better just to enjoy your weekend, take a break, spend some of the money. If you took some of these trades, spend some of those money, some of the profits on maybe some warm weather gear and hail protection for your car, something like that.
I love it. I love it. That's really cool.
That's it.
So we got literally a minute before the consumer sentiment comes out. I'm going to go through a few comments quickly. Robert showed up. Robert, it's good to see you again, my friend. He goes, another no sleep night for me. What happened, Robert? What happened? Why no sleep? You got to get that sleep in. Hopefully, I didn't miss Sam's golden knowledge already. You haven't missed much from my end, so don't worry. Sarah asks, James, are we yet to know whether you are a swing trader or an investor? Well, I guess from today you do a bit of day trading as well, but generally you classify yourself as a swing trader, right?
Yeah, a swing trader. I used to day trade. I started off day trade. Day trading is a lot of fun, and especially I think day trading is valuable when you start trading, because you spend a lot more time at the charts, and because you're looking at much smaller moves, much smaller, shorter time frames, you get to see a lot more action, a lot more patterns. Within one day, you might get to see 10 different things form on the shorter term charts that you can look at and go, oh, I see that. That's a descending triangle. Oh, there's the bounce of the 20-period moving average. There's a head and shoulders pattern. Or, oh, look at what the stochastic at these low prices, whatever it might be. But if you're just day trading, swing trading like me, I only look at 4-hour and day charts most of the time. And I might see one of those patterns once a week. So I think that's why day trading is useful when you're starting out trading, and it'll help you learn all of the things that you need to learn about trading in super short time. Whether you want to carry on day trading or not thereafter, I don't know. It's kind of tiring. Some people like to do it for an hour or two a day. Some people do it all day long. Some people get obsessed and addicted to it. It's a bit like gambling. If you've got a gambling problem, probably not for you. If you've got a gambling problem but you want to trade, you'd probably be better being a swing trader or an investor.
Yeah, absolutely agree. One more question, I think. Hi, James. Hi, Sam. This is from Johannes. I hope I'm pronouncing your name correctly. What can I honestly do against my undisciplined behaviors? How can I really fix behavioral patterns like FOMO, impatience, or risking too much? You got to be strict with yourself. I mean, for me, what worked was literally writing down the rules and writing it on a piece of paper and sticking it next to my monitor. And every time I felt I was about to break one of the rules, I looked at it and just eventually you do just stop. I think when you've experienced enough pain in the market, eventually something clicks in your head and you're like, okay, I have to I gotta do this right. You realize you just go around in circles otherwise. So I mean, I don't know if you got anything to add to that, James.
Yeah, I think you're right. I don't know, man. As humans, can we ever learn anything without getting hurt first? I don't know what the answer to that is. I don't think we can.
Yeah, I think you got to experience the pain, sadly.
Yeah.
And then Robert goes.
It goes through all parts of our lives. Isn't that true? I mean, we just mostly have to learn things through pain. And if someone tells you don't do something, you're probably more likely to do it than not do it. And the only way you can find out is by and trading's a bit different because also the market is very difficult to understand when you first come into it, because you don't know what's going on, what might make it move, why it's moving, and every instrument's got a different personality, that's for sure. And so it's a matter of just learning. I think most people, the biggest problem that they have in losing money is when the market does something unexpected and people go, well, why has it done that? It shouldn't have done that. Or, I didn't expect that. Or the news was something that should have made the market do something else. Very often the market does things that you don't expect it to do. And in fact, you can use that to your benefit. If you think about the most unlikely thing that you think the market might do, doesn't make any sense. The most unlikely thing that the market could do in the next hour is probably something worth considering, because often the market will just do that anyway to clear out a whole bunch of traders who don't expect it. Market makers will tend to push markets in those directions. So it's quite a useful thing to imagine the unthinkable and imagine if that happens. First of all, you can protect yourself by saying, okay, if that did happen, what would be the effect on my account and how can I manage that? Or if that did happen, how could I capitalize from that? And if the market does something completely unexpected, contrarian, which is what a lot of traders are, you can do pretty well. But the mental discipline of overcoming FOMO and YOLO, and I'm sure there are lots of other acronyms that match those, is just a matter of discipline like everything else in life. And if you're a wuss and a softy and you can't discipline yourself, don't trade. It's really as simple as that.
Yeah, I agree. And then Robert said, replying to Johannes's questions, so far realizing I don't have to always be in a trade, just trade a good setups first. Absolutely agree, Robert. The market, there's always going to be opportunity. If it's not right now, there'll be one a bit later, maybe tomorrow, day after. There's no rush. Don't try and rush the process. If you're trying to, you know, if you're coming in with the mind frame that trading is going to fix all your problems in your life by next month, you're destined to be, you know, you're destined to fail essentially, because it really is more of a long-term process, and you've got to see it more. All right, in 5 years, I can be doing a lot better if I take it seriously now. So don't try and rush the process month to month. Take your time with it. You really, like, slow and steady wins the race. That saying, truest thing in trading, right? Slow and steady wins the race, honestly.
Yeah.
We're going to quickly check the charts. We'll get back to, we've got a few more questions coming in, but we'll get back to the questions in a minute because I want to see what happened with the news. James, if you don't mind, can I switch to my screen?
Yeah, of course.
Thank you. ES.
Yeah, so the news
Right.
came out, Sam, the Michigan stuff. I'm always tempted to say Michigan, but it's not. It's
Michigan.
Yeah. So inflation expectations are up, which is interesting. Consumer sentiment is down. And that's the story, really. So the market did react negatively for a second, and it's bounced back up, as you can see, dramatically, and about to surge much higher again.
So what's interesting here is about 10 minutes before the news came out. So this is the candle, the news. No, sorry. Yeah. No, this is the candle, the news came out. Sorry, this one here, right? 2 o'clock. I said right before the news, you're going to see volume spike up massively, right? And that's exactly what happened. And that's not people shorting the market. So all this volume you see here, sell volume, that's not people trying to get in for a sell. That's all these buyers getting out right before the news is about to drop, right? People who are obviously more, you know, short-term traders in terms of, you know, potentially they might get stopped out from this, you know, push down, right? That's all of them getting out. So it's when you're reading like the footprint, at least, never look at it as, oh, these are always new people coming in, right? A lot of the time it's actually people exiting, and you have to look at it as like a story. You can see where the buyers entered, right? You can see it clear as day where the volume picked up. That's why I like to trade exactly when the open starts. I like to be on the chart because that's generally where the new wave of people come in, right? Yeah, this new wave of buyers come in and they rode the market up, and you could see them exit before the news came out, a lot of them. And now I can kind of figure out right now, okay, there's going to be a bit less buy pressure in the market. Okay, so the market could potentially either pull back a bit. It did pull back quite a bit and recovered, but it could go sideways for a bit, as now we kind of have to wait for fresh buyers to step in to keep that buy pressure, to keep that momentum going, right? So we are kind of in a kind of reset mode a little bit, right? There's the pressure is kind of equaling out. So now it really comes down to, let me look on the candlestick where we are. So yeah, oh wow, yeah, that's on the footprint. You never see it as effective as in the candlesticks. Like the candlestick, you can really see how much it's moved. On the footprint, it's a bit deceiving, I find. Like that doesn't look as big as on the candlestick. So it's good to always have a look at a candlestick chart as well, just to kind of gauge exactly what the hell's going on. But these zones now, they've kind of all shifted a bit. So I'm going to get rid of some of these zones, especially it almost touched that bottom zone. Almost touched it, pretty much did. Oh, no, that's the bottom zone. Sorry, almost, that's the middle zone. Yeah, sorry, I'm getting confused myself here. What is that zone? Okay, so that zone is pretty much been broken and played through, so I'm not interested in that anymore. The next kind of area would be actually just above the point of control here. It's quite an interesting part. Bit of a gap. We've got a little bit one there, but that's, again, it's kind of already sort of breaking through it. But within there, again, still, I would love to see it. I know James wouldn't love this right now because he's in a buy position, but I would love to see it come down here so I can actually buy the market. I'm kind of hoping it won't, because of my good friend James. I don't want it to go
No,
against him.
don't worry about me.
So hopefully,
if it drops back down there, Sam, I'll buy a bit more. No problem.
Or ideally, keep pushing up to about here, and then I have a short position. But at this moment in time, again, no one right now is pulling the trigger on anything. We haven't got any real big players doing much. I'm just going to double check the volume. Sometimes switching to the 15-minute can give you a bit of a better picture on the volume. Oh, what have I done? There we go. Yeah, we're getting a bit more buying coming in again around that sort of area. Obviously, the news, this is mostly people exiting, a lot of exiting. We're getting, what is this area here? I want to see this on a 5-minute, a bit more clearer. What's going on here? There's a random pocket of buying happening in that area. Right, that's just more, okay, that's just more of a coincidence, right? We had 500 contracts there and then 500 there, but that's, I don't think it's the same player. That's just a coincidence. They just happened to line up. So I'm ignoring that. But we are getting 600 here. I'm pretty sure that's just, yeah, pretty sure that's 600 here on the sell side, or someone taking a position, hoping it will drop down, saw it wouldn't drop down and pretty much got out instantly at break even. So I'm ignoring that. That's kind of equaled itself out, I would say. I don't think there's someone in the market anymore. Sorry, I don't know what I'm doing with this path tool. But yeah, I'm not seeing any big players right now doing much. I'm going to ignore the news candle itself, as I'm going to assume that's more people getting out the market rather than getting in. Yeah, give it a bit more time. I have my alerts. Are my alerts still on? So I've got an alert. Where is my alert? Why have I got an alert there? That's odd. I could have sworn I put an alert here last time. Okay, never mind. I accidentally put an alert in the wrong place. Never mind. Yeah. Bit of a waiting game. I got my alerts set at the right areas. I do want to see, yeah, I do want to see volume coming in the next 10, 20 minutes, hopefully. Someone, you know, we're seeing a little bit of heavier volume coming in from the sell side now, 700, 400. So let's see how it plays out for those people. But no real trapped volume. And the reason I had a few comments, people saying, why am I obsessed with trapping people? It's not because you know, I'm not a nice person and I just want everyone to be in pain. That's not it. It's because it sparks the best reaction in the market, right? So I explained this yesterday, I believe. Because there's two ways. Look, if people exiting has a similar result to people entering, right? It works on the opposite side, right? If there's an area and the way, like, say this area here, right? If it comes down to here, the only way it could keep going, it could reject and go up, is if people are actually entering. If new buyers come in, step up, and push it up. If that's what I'm waiting for, right? New fresh pressure coming in, it's a bit more risky because no one is ever forced to enter the market, right? It's not mandatory to enter. However, if someone is trapped, right? Someone has entered with a lot of money and it's going against them, they are forced to exit. So the response is more effective. Does that make sense? So I'd rather wait for someone, or, you know, a group of people to be trapped, because I know they will be forced to lift off their position. They're not going to hold it forever, right? Like, they have to let go, especially if it's a lot of money, and they put a lot of risk on the line. They're going to get out. And if they do get out, that's going to release that pressure and you're going to see that pop happen. So that's really why I only ever trade the trap setup, just because it has what I would say the highest probability of something moving quite fast. I'm not saying other setups don't work. They absolutely do. but you might find it consolidates a bit more, or it takes a bit longer as new people enter and kind of build that pressure in the market. But when someone is badly trapped, believe me, and it goes against them, believe me, they are getting out of that position. And when they do, the moment they lift off, the market moves. And that's why, but you got to be patient. Like, you have to be patient for it. You can't just, you got to constantly work out the cycle of what's going on, right? New people entered here, new buyers entered the bottom there. They've gotten out before the news. There's no one really getting in at the moment, no major pressure. I mean, we're having a bit of sellers coming in, but still not huge amounts of volume. I mean, you could say there's a few people trapped here, these sellers potentially getting trapped. 800 contracts here, 500. There's a little pocket where it's kind of going a little bit against them. They might be getting a tiny bit nervous, these sellers, right? But you can see they haven't actually exited their position yet. Actually, more sellers are doubling down. But like, for example, it's just not enough volume to really have a big impactful move, I would say. It could drift up a little bit, but I want to see more, just like genuine big volume, like at least a few thousand contracts. This is maybe 1,200 contracts combined. It's okay, but it's just not big enough. And you'll see, as it starts going against them, you're going to see these people dropping off. Already 500 contracts, that's definitely these people dropping out. You're going to see bigger numbers slowly appear as these people here are basically getting out of their position. But it's not going to have the big impact, right? Because it's just not high enough volume. So I'm waiting for the volume to really spike up on the footprint in a very small, like, price area, right? Not like spread out between multiple candles, but in a very confined area, lots of volume. That's what I'm looking for. So
Sam,
I'll keep
when
my eye on it.
do the green candles, once they've printed, or the whatever you call it, the footprint, once it's printed, is it, all the red ones, does that remain fixed as you roll it? So the market moved up, printed some green bits there, and then moved down. Does the green, so as the red starts to build, does the green start to reduce after it's printed?
It entirely depends. I mean, what you're seeing is just a delta, so the difference between buyers and sellers. So
okay.
every time it's in a price level, if more people more people are selling right now, so this is getting bigger, but a few people bought there, so it dropped a little bit. It's always just a difference. I mean, you can see the actual raw numbers if I switch it to buy and sell, but it's just a lot harder to read for me, because now I'm going to have to do mental math in figuring out who's who. Do you see what I mean? I'd just rather see
so
the difference.
So you can't see the absolute number.
You can, yeah.
Oh, you can. Oh, you can see. Okay,
so you can see yeah. So I can see exactly there was 1 point. This will never drop now. Like, it will only increase because it's not canceling each other out. So I could see there was more sellers here, 2,000, and but I mean, some people trade with the buy and sell contracts. I prefer the delta just because I feel like the difference matters more than the overall total volume. Does that make sense?
Yeah, but what if you've only got like 100, what are those contracts traded, and the difference, 100 long and 50 short, the difference is 50. But you could have 1 million long and 9,999 and 50 short.
Yeah.
And still have a delta of 50.
Well, yeah, absolutely. But I would imagine not much it would cancel each other out quite well then. Do you know what I mean?
Yeah.
You would see a lot of chop happen in the market, and I think, that would be insane. But not one side is actually that much stronger. Do you know what I mean? It'll be a very aggressive battle, but and you can see it generally just in the volume then. Like, I have like the total volume below the candle, so I can see where there was a lot of activity happening, so to speak, like which candle had a lot of activity. But it doesn't it's more just then, like, and I capture it in the volume footprint as well, not the footprint, the volume profile, sorry. I can see the areas or the price levels where there's heavy volume, and I don't need to see it on the actual individual levels too much. But yeah, So this has just become now the point of control, really heavy volume. So that, like I said, no one's really making a major move right now. Everyone's kind of being, I mean, the sellers are really piling on the contracts, to be fair. They're actually trying hard. So there could be a potential to buy, but they're not getting out of their position. They're really not getting out of their position. They are holding on for dear life. They're not making much progress, right? I mean, way more selling is occurring than buying, but the market's not actually pushing down much. So at some point, if it continues going sideways, these sellers are going to give up, right? It just now depends whether, if the market pushes down and goes in their favor, then they're obviously going to hold. They're going to keep in their position. If we're continuing going sideways, eventually sellers are going to lose interest. They're saying it's not working out, and they're going to exit their position, and that should pop the market up. So there is a potential for a trade. It really depends now on what actually happens. But it is pushing down a bit, so they're probably very happy now, these sellers. But they get absorbed very quickly in this area by buyers. There seems to be a lot of buyers popping in. But yeah, a lot of it, unfortunately, is just staring at numbers and just kind of waiting. It's not the most exciting. It's not the most exciting job, but
do you want to look at the metals in the meantime while you wait?
Absolutely. I'll keep it in the background of my screen here, and I'll just keep blinking at it. And if I see anything, I'll make you aware.
Just switch over, yeah.
There we go.
Awesome. All right. So gold hit $3,000 today, and we're long from 2,910. So
wow.
But I've been long for most of the time, but in this zone here, which has lasted over a month, I've been variously long and short, and taking tiny little bits of profit or hedging or whatever, being just basically going nowhere. I actually thought this market would not make it through the top here. We've got a beautiful trend line confluence and the 20-period moving average, a failure through there, and an inability to break up through a rounded top. And lo and behold, yesterday, was it yesterday? 2 days ago, we went long based on the 4-hour chart. Now, if you look at the day chart, there's no real indication there that we should have bought or sold, but you can do that by looking at the 4-hour chart. And this is pretty simple and a fairly low risk entry. So we've got a triple top right here on the 4-hour chart, 1, 2, 3, and that's at 29. Well, the body of those candles about 29.20 or so. And the moment we closed up above that very strong triple top, I took a long position with a stop or hedge down below here, and the 200-period moving average. That's this purple line. And then, just as it turned out, it broke up not only through that top, but also through both of the trend lines, and now up through, just peaking up through $3,000 to $3,005. So people asked me this morning, where is this going? Do you think gold's going to 2,800 or 900, or is it going to 3,100 or 200? Now, the answer is, of course, I don't know, and nor does anyone else. So we have to just follow what's going on here. And the first thing I want to do is look at the day chart. We're still long and strong. A shaven top candle yesterday, which means incredibly bullish. No wick at all at the top or the bottom. Okay, maybe a $1 wick or something like that. And pushing up slightly higher today, so making another higher high through $3,000. So I think because we faffed around here for so long and failed to break up through that trend line for, I don't know, I suppose it's 2 weeks or so, because we've managed to now finally do that, I think this market will, my screen's just gone off. I think this market will have gathered, the longer things hang around and consolidate, coil, accumulate, the stronger the move's likely to be. So I think rather than stopping at $3,000, poking through it like we've just done, and then collapsing down, my two targets to the downside are 2.8 and 2.7, roughly. 2.7820, 2.720, 2.820, and that coincides with some of these support lines down below. So Are we going to move down or are we going to move up first? And my contention is that because of this long consolidation period, faffing around, frustration, people got bored, people got out of their long positions. They've now been locked out, so we're free to go. And I think we're going to go up to 3,180, and then we'll see what's going to happen next. Same thing with silver. Took a trade yesterday, actually literally yesterday, not the day before, just on the breakout through the tops of these bodies and on the fact that gold was moving higher. And we have a beautiful technical breakout pattern here. Silver trend line failed it, broke down to the 50-period moving average and the 100 down there, reclaimed the trend line, tested it from the top, held the 20-period moving average and the trend line, formed a bullish engulfing candle. Not only that, it's also a piercing pattern candle. We made a lower low, and we've now moved up for 3 days in a row. So we only got long in silver quite late in the game. But my target for silver, and ridicule as much as you want, but my target is $60, which we have never reached. So $60 target. $50 roughly is the all-time high on silver. So I'm aiming for 60.
Well, I mean, if gold is now breaking up all-time high, I mean, silver generally follows suit, right? Like, so yeah, absolutely.
Yeah, I mean, it's a hell of a stretch. If you look at the weekly chart on silver, this is not gonna be easy. So there's the $50 level. That's the $50 level. But we're not that far off. We're 60% of the way there already. And look where we are. We're at 30, and we've got this beautiful support channel underneath us. And the time in between the two $50 tests was 1980 to 2009. So call it so 30 years ago. It took 30 years for us to retest that level the second time.
Wow.
And this time it's only taken, what date is that? What did I say it was? Can't remember now. 2002 and 2025. So this time it's only taken 23 years to get here.
Only
no,
23.
That's 2012. It's only taken 13 years to get here. 13, not 22. 13 years. Yeah, well, it's a lot quicker than 30, isn't it?
Yeah, it is.
Yeah. So all of those. Excuse me one second.
No, take your time. We'll look at some comments.
I trapped my
how
cat
do I
in the cupboard,
determine?
I'm sorry.
Oh no, yeah, definitely let him or her out. Sarah Walker says, how do I determine whether a market is ranging or trending? I mean, very, very easy to spot, really. If you look at the center of James's screen there, you can see a little bit of a ranging market, right? It's just going sideways. There's no real structure. It's just pushing up, push down, push up, push down, but it doesn't actually go anywhere. There's no lower highs. There's no like typical market structure of a trending market. A trending market, like an uptrend, you're going to see higher highs, higher lows, so forth. A downtrend, you're going to see obviously lower lows, lower highs, etc. So if you want to actually, James, if you want to kind of like highlight those areas, I mean, because there you can see a trend and a ranging market perfectly on your screen, so might be able to point it out.
I mean, there are all sorts of ways of doing it. I mean, this is not the best chart, it's just a horrible chart in general. It always is. But I mean, gold's a good one actually for looking at that. This is the gold day chart, and it's pretty easy. So you can see gold moves like this anyway, but it's we get a good move up and then we consolidate for months and months and months. And we know, I mean, so one of the first ways you can decide whether we're entering a ranging market is simply by saying, well, we've moved up a hell of a lot, and now the market is probably going to range for the next 3 to 6 months. That's what I think we're going to do sometime soon. And when it starts ranging, and after a huge move up, by the time we get to the top, you'll kind of know when we're topping out. You can look at your 4-hour charts, you can look at stochastics, you can look at divergence, you can look at trend lines, whatever you choose to pick a top. Once we've got a top formed after a massive move up like that, we're more likely to range for the next period rather than continue immediately. And so you can set your top level there. And you can wait for the bottom level to form by itself as well. So once the bottom forms and we start moving up, you've got a top and you've got a bottom. And then the next period of time, your job as a trader is to sell the tops and buy the bottoms, trade that range. Pretty easy. And when you're in a range, you can start using all sorts of tools that you can't use in a trending market, like oscillators, MACDs, and moving averages, short-term moving average crossovers, to give you those very quick entry and exit points in the range. So you're selling the top when perhaps the stochastic's overbought and turning down, buy the bottom when it's oversold and turning up, until that ranging market breaks out. And when it breaks out, and you won't know when it's going to happen, when it breaks out, you're probably going to lose money because you'll be trying to sell the top and it'll surge higher. That's okay. You got to pay your school fees. What we've got going on right now on gold, for example, there's the surge higher. We've had it already. I don't think we're going to get to $4,000 now. I think we might get to, this might even be the top where we are right now. Once we find the top and we start moving down, we'll set that as the top of the range. And we've got the bottom of the range in place already, perhaps at around about 2.8, as I said, 2.820, somewhere down here, maybe this trend line. And we'll probably range for the next 6 months on gold, 3 to 6 months. That's what it normally does. And you'll get to know the personalities of these instruments that you're trading as well. And so, yeah, markets actually range more than they trend in general. If you look at this chart in front of you and try just eyeball it, how much of the time is it spent moving one way or up or down, and how much is it spent going across the chart like a drunken spider? Most of the time going across sideways. And the same goes for most markets, particularly currencies, particularly gold. Stock markets inherently go up, so they don't range as much. And it's all pretty much common sense. Things that are meant to go up, like the stock market. Things that are meant to range most of the time, like natural gas or sugar or whatever it might be, some sort of commodity. A lot of the metals range a lot of the time. They're also commodities. And so expect a lot of ranging markets no matter what you trade. And at some stage, Bitcoin will probably become a ranged market most of the time as well, for example, because it's more like more like gold or a currency, which will be ranged most of the time. So Bitcoin's not going to carry on going up forever. It will eventually become more ranged than not most of the time.
Interesting, yeah. Any other questions? I think there's all of them. We have just under 15 minutes of this session, so if you do have any more questions, feel free to post them now so we can have sufficient time to get back to you. Robert says, I think we need a whole footprint video from Sam. It's in the works. Don't worry, Robert. It's in the works. It is happening at some point. If you're subscribed with your notifications on, you will be alerted. Don't worry. In terms of my charts, I am potentially seeing possibilities for a buy position, but it just hasn't triggered yet. Let me quickly share the screen and you'll see what I'm on about. So, let me switch it over. Is it switched over yet? No. Paul has done it. Perfect. So we saw these heavy sellers come in, right? We've got another 1,000 contracts here, 800, another 800 below it. So there's someone who's put a lot of money in the sell side, but we haven't seen them exit yet. That's the only thing, right? It's pushing against them, but every time it goes, they're doubling down. They're adding more contracts to the sell side. 700, 699, basically 700. They're adding even more volume. Again, 700, defending it, right? They do not want to get out. They're putting a lot of risk on the line. They do not want to get out of their position. So that's the only reason I haven't entered yet. Otherwise, I would have entered for a buy if we saw them get out. They're being very stubborn. Hopefully, it doesn't work out for them. And, they're forced to exit. The moment they're forced to exit and we see a big numbers coming in from the buy side, they have lifted off their position and we can go in for a buy. But we've got to be patient. It could happen in the next few minutes. It could happen in 10 minutes. It could happen 20 minutes and an hour. You just don't know, right? That's the sad part. You just can't. Whoever these people are, they're being very very stubborn. Normally, most people would have exited by now, but these people, they're being very stubborn. I mean, it's moved up quite a bit against them. Maybe they got their stops close to here. Maybe they're looking for a more longer term position. Maybe, I don't know. But eventually, hopefully, because they've never actually really been in profit, only ever so slightly here. Most of the time, these people have been in drawdown. So hopefully they get tired and are sick and tired of just seeing red on the screen, and they actually exit. That's what I'm hoping for. So the moment I see it, I'll buy. But they're defending it very well. Whoever they are, they're very adamant. You can see they got in again here. You know, adding more contracts. There was another 700 they added here, but it was what's it called? Cancelled out a bit by buyers, but no real major buyers are coming in, so to speak. We've got a few bit of buy pressure, but it's definitely, you know, the sellers are being way more aggressive. They're just not having that much luck. So yeah, this is basically when I say let the big boys battle it out. This is what's happening. The big boys are battling it out right now. Let them battle it out, and when it becomes clear who's giving up and who's going to lose, you jump in and you just collect the crumbs that basically that fall off them. That's all you're doing. Don't try and predict who's going to win, because the sellers could still take it. They can just keep adding more pressure in it, and eventually just the buyers can't absorb them, and it's going to flood down. That could very easily happen. There's no, do you know what I mean? At this point in time, I have a bit more of a bias towards the buyers, because the buyers seem to be doing a better job at holding back the sellers, but they could give up as well. Like, you know, I mean, it's not really going anywhere. It's kind of just going a bit sideways for the last few minutes, you know, 10 minutes or so, 10, 20 minutes even. And you can see that sellers are not giving up. They're just constantly at it. Buyers are not really giving up too much. So everyone's being a bit stubborn, but someone will eventually give up, and then we'll have our direction, so to speak. But that's pretty much it. We've got 8 minutes. I mean, hopefully it happens in the next few minutes. I really do hope. It's going to be one of these days, I guarantee it. As soon as the live session ends, a few minutes into it, then after the live session, and all of a sudden it will occur. People might be waiting for a candle to close or something. Who knows? I don't know. But we'll see. We'll see.
We got the 15-minute candle closing in 7 minutes. But what we do have on the 15-minute charts on both the NASDAQ and the S&P is a tweezer bottom. If you want to switch back there. And
yeah,
it's one of my favorite candle chart patterns is a tweezer bottom. Shall I switch back?
Yeah, please. Yeah. Let me take away mine and add yours. All right.
Okay, I don't have the fancy controls on my side, Sam. So I have to rely on you.
That's all right.
So here we go. Both of these charts look identical. What's interesting is both of these tweezer bottom is when you get an equal low, identical low on both on two one candle following the next, two subsequent candles. They're meant to be identical, but this is close as you like. I mean, it's good enough. And particularly if it's a spike low, it doesn't have to be a wick. It can be a flat bottom. It doesn't really matter. But as long as the two candles are identical, better if it's a wick, because that adds a little bit more bullish sentiment. Same on the NASDAQ as on S&P. In fact, there's like a quadruple tweezer bottom there. But notice that it's also holding above that trend line on the S&P. Even though we broke down through it and spiked down twice, we didn't close beneath the trend line. We also reached that order block on both of them. We also reached all these moving averages and this purple line, which is the 20-period VWAP, volume weighted average price, all in the same cluster and bouncing off there quite dramatically. So I think it still looks good. And for me, that tweezer bottom indicates, it'd be interesting. So this is a 15-minute chart, but interesting to see what your candles, your footprint look like around there, Sam, on those instances of trying to form that bottom, which it seems to have been successful at.
The tweezer bottom, let's have a look.
So that's like half an hour ago, I Yes.
Do you want it for the S&P
Well,
500 or?
Yeah, S&P. Yeah, just to
All
see
right.
if you picked up any massive buying at that level, really, at 5565.
What time was it exactly?
At 16. Well, on the
Oh,
top, the
okay.
last top of the hour, and the next 50 candle.
Right. Okay, let me switch screens. So this is the 15-minute footprint. So yeah, so this was the news candle. So we didn't see much at the bottom in terms of volume. Most of the volume was near the top because there's people getting out before the news, and then we kind of just, I don't know, played around in the center a bit after the news. But there really wasn't much volume at the bottom.
Okay.
Let me. Right. And it's the next bullish candle. Yeah, we saw a bit of sell volume come in, but again, it wasn't huge amounts. It was more near the top we found the sell volume. And these
Okay.
people
That's
still
interesting.
haven't got out of the market. They're still in the market. I mean, maybe
So,
they did get out ever so slightly. But I didn't see any numbers spiking to indicate that this heavy
where
selling
would you
here has
see that
has
those sellers at the bottom there, or at the top of those tweezer candles? Where would you see if they've started to get out of the market? How do you determine that?
it
So
would just be the opposite. Like,
so the sellers that got involved on those sort of probes lower, forays lower, you say they're still in the market. How do you determine that?
just because the volume is not balancing.
Ah,
If they got out the market, you would have seen, because it's on one individual price level, right? You can kind of presume that it's one or two organizations placing big orders at that price level, right? If the volume's all spread
right.
out within a candle, then it could be loads of different people and it's hard to track who's who, right? But when it's very confined in a small area, you can kind of figure out, all right, this is person A, maybe that's also person A below them. It's like one or
Yeah,
two
yeah.
organizational big institutions, right?
Right, right.
And if they need to get out, you would see a similar number being printed on the opposite side, which we just haven't seen. They're actually adding onto their positions. You see these big sell contracts coming in. I can guarantee you almost with quite good certainty that that's the same people adding onto their position, really trying to push this market down. They're being very
Right.
stubborn. They probably have their stops above here somewhere. So if it did break out, you would see huge amount of buying contracts all of a sudden, lift off, and that would be them exiting the market, and that would,
Right.
kind of be like a breakout position then. But yeah, you're
And
just
would
seeing
that
every time it pushes up. Gone.
would that trigger you into if you saw massive volume on a breakout, is that the sort of play that you would take yourself personally?
I don't like trading it when it's too high up already. If it's already too high up, I don't really like breakouts. But in that case, I would be more confident trading it because I know there's a lot that volume or that breakout are those big sellers getting out of the market, right?
Right.
If there was no heavy volume on the sell side in the market right now, and it broke out, and I saw heavy volume come in from the buy side as we broke out, then I definitely wouldn't trade it because then I would assume these are fresh buyers coming in to
Yeah, yeah.
trade the breakout, and that will leave them
That's
vulnerable.
really interesting. So just going back to those candles there with all the sell orders and all that sort of thing.
Hmm.
So I just want to sort of get into your mind here. So you've got a whole bunch of volume hitting the sell side, and then on the way up, you're not seeing those exit because you're not seeing massive buy volumes, even though the market's moving up. Is that what you're saying?
Yeah,
So
absolutely.
meaning they're still holding on.
They're holding on and adding to their positions because you'll always see jumps, big jumps in the sell volume coming in. I've seen it a few times, like it's spiking to 700-800 on the sell side. That's adding more to it, adding more.
Yeah.
Again, it's jumping up back to 630. They're really defending it. They are just being stubborn as hell. But again, you can't, everyone's got a different strategy, right? These people, this might be perfectly within their risk tolerance, right?
Yeah.
They might be, you know, I don't know where their stops are. Their stops could be even higher up. Who knows, right? This could be a longer term position for them, right? Maybe they're just adding orders, you know, and they're not really, you know, their stops might be really high up somewhere. We don't know. It could be a long term position, but they haven't got out yet. Normally, the more shorter traders, they would have got out by now. They would have got out probably around here. And like I would have, if I was them, I would have got out around here, you know. But yeah, I mean, it
Okay.
depends on the people. But you're starting to see a bit bigger numbers on the buy side starting to appear. 500 is okay. That's probably the biggest number we've seen for the buyers in a while, which might be a good. It's still not big enough. There's still. I like to at least do about 50%, right? So I counted up roughly how big these sellers are. Right, that's about 2,000, 2.5. 3, 4, 5, around 5,000 contracts. So I'm starting to see a bit bigger numbers. If I see around 2.5 clustered in a very short area, in a small area, then I know, okay, they've at least lifted off half their position or around that. Do you know what I mean?
Yeah.
I want to see like at least 50% of the kind of volume, the sell volume trapped in the market being lifted off, and then because 500 is still, I mean, it could be 600. It's getting a bit bigger, so this is starting to look a bit interesting. How much time have we got before the end? Ah, damn it! It's the end of the live session.
Sam, yeah, these what? How do these sessions work? Are the next traders coming in right now, or they're coming in an hour, or what's the deal?
They're coming in literally in like 14 minutes.
Oh, okay.
Set up. I mean,
all right.
This might still take another 5 minutes to play out, but I'm seeing slowly, I think they're starting to lift off their position now. We're seeing 800, 500 clustered in a small area. It's giving me a bit more. I'm tallying about 1,500. I want at least another, give me another 800 or 1,000 and I'm in. But I'm slowly starting to see them lifting off their position. I would probably enter.
I don't mind hanging around
a quarter of a position now
with you if you want.
I would enter a quarter of my position now. My stops would be, let me find a good area where I would be happy to, I'll put my stops probably below here where, you know, and the reason for that, let me just jump on the 5 minutes so I can see a bit more clarity right now. Sometimes you can see a bit better on the 5 minute. Let me enter on my live account quickly as well. Okay. Where are we?
Hey, hang on. How do you drag your stop loss down on the chart? I've never figured that out.
If you hold your mouse near the position, you'll see like if I cancel the stop loss, I'll show you. Okay. So you'll see SL. Just click on the SL and drag. Don't let go, and drag to wherever you want it. And then the moment you let go, it locks in or whatever.
Well, there you go.
But realistically speaking, so my stops will be down here. I learned yesterday that TradingView has what's it called? A desktop application. I didn't know that.
Yeah. That's what I use. Yeah.
So who knows? Yeah. So realistically speaking, below this kind of where they exited, all right, where they're starting to lift off their orders. If we start breaking below that, I'll be getting out of this quarter of the position. I'm not going to be adding more to the position. I'll only add if I see, again, bigger numbers coming in. But there is still sell pressure coming in. They're still trying to defend it, but they haven't fully given up. But I feel like they've lifted off a bit of their position so far. They are lightening up, so to speak.
Where are you
just waiting for them to give up?
Where are you seeing the new sell positions coming in? Because I just see green blocks on your.
Well, if you look at the numbers, right, you'll see them drop sometimes. So they were a bit bigger, like the buy side, and you'll see them drop. So remember, it's only the difference between buyers and sellers. So the numbers can change. If I see them drop
Okay.
by like 100, 200, I know that's sellers trying, like there, it just went red. That's sellers aggressively trying to push the market down. They're really defending. They haven't had that much luck recently. So I'm hoping they just give up. Do you know what I mean? Just give up. Accept your fate. It's not going down. Give up. That's what I'm screaming at them now. But you can
Okay.
see them. They're trying
Yeah,
to
yeah.
battle it out, but they're getting absorbed by the buyers, which is so far, it is looking all right. And I want to see bigger numbers come in before I add more to the position. In terms of take profit, I mean,
So let's
we're
talk
already
about
near the high.
what's your take
Sorry?
profit strategy for this? What's your take profit strategy for this sort of breakout trade?
So no real major strategy. I'll look at obvious last highs where I can imagine people will be taking their money out the market, right? So I'll be marking out any important kind of highs, even ones that are quite nearby still, right? And I've marked them out, and it will really just come down to the actual orders. If I see now heavy, big selling, so again, if I see big selling coming in, I would assume there's a lot of buyers exiting the market as well, right? And I'll be exiting with them, essentially.
Right.
But it has to make sense, right? It has to make sense. It will be near a high or where people would generally be taking profit, right? People don't just take profit in the middle of nowhere. They'll be in line with structure, right? So if I see heavy selling in line of structure and the market is struggling to kind of break through it, I won't just instantly get out. I'll kind of, watch it. Then yeah, I would see that as probably a time to get out. But
So Sam, you've never
what
come
time are
across
we
a
at
trader
now?
who's taken profit in the middle of nowhere for no apparent reason.
Well, no, I mean, I do it all the
Like
time, to
me.
be fair. I get spooked and I'm like, oh, getting out. Yeah, no, it happens. But generally speaking, like as
Yeah,
a
yeah. I think
so
I
you're
do that
seeing,
about
look, as
every
we're
second trade I
there we
do
go.
that.
I've added another position. Come on. It's frozen. I'm seeing bigger numbers coming in. But I'm also very weary that we're getting close to these highs. I don't want to be trapped myself, right? A breakout, you could always be the victim as well in a breakout. Okay, I know some of these sellers from earlier are lifting off their position, but they could still come in near these highs, and other sellers could come in near these highs. So I have to be very cautious with as we until we break them like nicely. You're not really out the woods. Do you know what I mean?
Yeah. So
But yeah,
the black lines that you've got drawn up above us there, are those the sort of an idea for targets?
those are the highs.
Oh, okay.
Not necessarily targets, but there's just areas where it could be critical.
Right.
Everything can change around these areas, right? Just because they're previous highs. And if I
Yeah.
see anything I don't like, big like institutional selling going on, I'm getting out. And I'm just accepting this trade didn't work out. I might still get out in a little bit of profit. It might be like near break even, might even be at a small loss, but I will know then if this is going to work out or not. Do you see what I mean?
Yeah.
So I'm not adding more to my position until we get now to these areas. But that's pretty much it. So I just kind of like follow the trade as it goes. Sometimes it doesn't work out. Sometimes it does. But I can only react to what's happening. I can't predict what's going to happen there. Because I don't know, like anything can happen there, right? I can only
Yeah.
react to what I see in the market at that time. But I am seeing sellers, trying to jump in still. They're not giving up. They're very adamant. And I think because we've had such bearish momentum in the last 2 weeks, I think a lot of people are very eager to try and sell this market right now. So they're being very confident,
Yeah.
which is because, normally in a more sort of range bound market, people aren't this aggressive with their positions. They'll usually kind of accept their fate and be like, okay, look, it might push up a bit. We're just not going to keep selling. But I think due to the
Yeah.
fact that the market has been so bearish in the last 2 weeks, we've people are more aggressive, which can work against
Yeah.
me, especially if you're buying. But you just have to trust that the buyers do not give up as well. I really don't like that those, 920. You can see they're really just stacking up the orders, but they haven't had much luck. This whole movement up, they haven't had that much luck in pushing it down. So
Yeah.
I think
But
we might be all right.
Sam, bear in mind there will be a lot of people overhead who are long from like Monday and who are looking for exit levels about now, I would imagine. So
Yeah,
people that got long at 5,600 on Monday will
yeah,
be wanting to get some relief, I suppose.
absolutely. But sadly, we do have to end this because in 5 minutes we've got the other coaches coming in. But I'll keep everyone updated with it on the next session, which will be Monday. But yeah. But everyone, thank you for watching. It's a bit annoying, I know. Oh, Yanni's already joined. All right, we'll be out of your way, Jannie. James,
Yannie in,
always
I'll
a
say hello to
pleasure.
him. I want to say hello to a fellow South African.
Jannie, it's a bit early, but we're about to exit any minute. We're not going to intrude on your session. Don't worry.
Hey, Jannie.
Hey, how's it going?
All right.
Oh, you can see me. Oh man, I didn't even know. I was like, oh my god, how's it going?
Yeah.
Like I'm chatting, like I'm talking to you guys in the chat. Like I've already been added. Wait, am I early or what's going on?
No, we're just very late, but we're leaving now. To all the viewers, stay tuned. Jannie's in what, 4 minutes? So yeah.
We'll just like before you guys, did you guys find anything? Like I found the markets like really difficult to read today, very rangy.
Yeah, I mean, well, it depends what you were looking at, but
yeah. Okay.
All right,
we'll leave it at that.
Guys, take care. Me and James are out.
James,
Cheerio.
nice to see you, man. Cheers.
Nice to see you, Jannie. I'll chat with you another time. I'm you're South African who lived in England. I'm a Pum who lives in South Africa, so it'd be nice to chat.
Yeah, definitely. All right, guys.
All right, guys. Take care. Bye-bye.
Bye.
Hello. Hello,
Hey,
everyone.
good afternoon. How are you guys? Good to see you all again.
Yeah, likewise.
Yeah, it's like, how did you find this trading week? I mean, maybe I'll start and tell you what I think about the NASDAQ. It was definitely, I'll just share it quickly. Not the same as last week. It was a much more ranging kind of week. And it's almost like expected, especially if you look at the daily time frame, which is always where I like to start. You know, we had that break. I always start with the daily, as you know. And we had that break, and then it kind of just put on the brakes. And now we're forming this sideways range, if you will. And that's reflecting in the short-term time frames as well. Even if you look today, it was a bit tricky. If you look at this price action here, this is the open, very strong push to the upside, immediately putting right back down to this breakout level, and then pushing right back up to, actually past. We are now just breaking the highs of the day. So, but yesterday looked very similar. Like, I think yesterday was actually a bit worse, right? Look at all these swings. And then eventually, I did manage to place a trade live. Igor, you were in the session.
Yes.
When I placed a live trade going all the way short to S2. So that was a nice little trade. But before that, it was a lot of this. And it's pretty tricky to trade when it's like that. You have to wait for the right moment. So the whole week looked like that. If you look at the day before that, look at these. I think that was yesterday. No, yesterday was core CPI. I don't even know what day of the week it is. Yeah, so that would be the day I just showed you. But the day prior to that was also, if you look at the open, that's the open, very kind of rangy, and then it eventually found a bit of direction, and then found support here at the pivot point, the daily pivot point, and then just shot back up. So very rangy, not clear, breakouts or anything else that I would like to see typically. But this week for me personally has been much quieter compared to last week. Last week when we had, Monday was a very strong day, but last week was just a much better day or time to trade on the smaller time frames. So yeah, that's how I found this week, just very rangy. How about you guys? Igor, you can start if you can share your screen if you don't mind.
I will share the screen just to show what a boring week, just to say that. Yes. So what I want to tell you is first to talk a little bit about yesterday. Jannie, we were together in the session. This trend line, I joined that session, and as you can see, nothing changed. So price on British pound dollar just in so tight range, so boring that it's I don't have any words to describe this what's happened right now. So
it's definitely a very ugly looking chart. It's not clean. It's not clean. It's not a nice chart.
Yes, yesterday we talked about that. I will wait to see some kind of a bullish momentum or anything, maybe something to reach this trend line, as you remember. And I wanted to make a sell order after the UK opening range because we have this pivot point area. Actually, it's equal to the pivot point price level. And I wanted here to make a sell order. And I was ready to do that. And everything was clear for me. But
and then you got a phone call.
And at that moment, and everything was good for me because because we had a news today. We had GDP minus 0.1% for UK GDP. It was worse than expected, and everything was on my side. But what's happened? I started to watch Eurodollar, and I saw this push higher. Then I started to check all US dollar currency pairs started to going up, and based on my experience, it's not good. Then I see that the British pound dollar, there's no strong push downside. So I just gave up for that trade. And
Yeah, do you sometimes feel like when you look at the euro dollar and the pound dollar and the Aussie dollar and
yes.
everything with the dollar, and do you find sometimes that some of them contradicts the others and it confuses you?
Yes, I know very often happens that one currency pair is ahead of other currency pairs. For example, usually, which I last several years just focus on that. One currency pair start to go bullish, for example, and going bullish whole week. Other just consolidate, and then next week all currency pairs starting to go up. And I know that. And usually I watch that as a strong, weak currency pair. For example, right now, euro dollar is much stronger than British pound dollar. And it's normal to make a push up more than British pound dollar. But the problem that I have here is that today is Friday. And on Friday, we have so many doji daily candles in statistics. We have so small ranges. Usually during the Friday, I see only one low, only one high. And sometimes the price, there's no momentum there. And this is surely for me some kind of the bearish bias. But last week we were so bullish and I'm confused. And because of that, I don't want to trade because I know in the past I made so much loss. And the worst day for trading for myself was Friday. Friday is the worst day for me. And unfortunately, I don't play golf. But I would like to be a rich guy, and I will play golf each Friday, and I will never trade on Friday. So one day when I become rich, I will do that. So this is the really problematic day. And on the other side, a euro dollar just make a push higher. The whole day we are above the pivot point area. And of course, I don't want to go bullish. I just want to watch what's happened here because the momentum is not so strong. And I only have in my portfolio one trade that I made last week, a swing trade. And I watched that. This was my entry position at the 0.62 and something, stop loss 0.608. And my target that I want to reach one day is 0.69. And today, for example, I see the strong bullish candle right now. So it's a good sign that this trade maybe can go more and more on the bullish side. And all of this just show me that the US dollar is not so strong right now, and all currency can beat dollar. So I'm not ready to enter neither short, neither to make a buy.
Yeah, that is not a. I mean, the problem you have with that chart is if you look at where you are right now, you are in it's a range within, or you have a consolidation within a wider range. Do you see that?
Yes. Yes.
So you get that sideways, the last 2, 4, 6, 8, whatever candle, whatever the candle count is there. It was just, you get that consolidation, but it's such an awkward spot.
Yes.
It's a very awkward spot because if you just immediately look left to that, you see that high and that low, and you bang in the middle of it. So it's just it's a very tricky place to be. So probably not a chart worth focusing on, if that makes sense. So to look for a potential setup. What's that time frame? That's the daily.
This is daily time frame. Yes,
yeah.
But like I said, when I made this order, I watched the excellent. It was the day before the excellent GDP news for Australian economy, and so great fundamentals from Australian economy on one side, and a solid setup. And I entered into trade, and I believe that we can reach some heights. I don't know which high, but I think that this is a good shape for me. I don't know why, but I'm ready to take a loss. I'm ready to take a loss here because I see that we are in the beginning of the creating of the strong bullish trend for Aussie dollars. So I feel like that. I don't know why, but I feel that.
I was thinking of you and this particular trade from last week because there has been some threats of sanctions from the United States against Australia now, and
Yeah.
I don't want to, it's so maybe that's causing that. I mean, this is like Jannie said, it's like we're in no man's land, and it's really difficult to trade that. What we want is a higher high, but we're not getting it because it's good news, bad news, bad news, bad news, good news, bad news, good news, bad news, and it's just there's so much hesitation.
Yes, it does make it for extremely difficult trading conditions, especially if you focus on the longer time frames, right? It's just it's not clear, it's not obvious, because if you just look prior that big move to the downside, if you look at that downtrend, you'll see that little that more or less in the middle of that downtrend, you get that spike to the upside and then back down.
Yes.
I don't know if you can just draw a line there. You see now that's much. I wish I could take over your screen so I can draw the lines. But like look at that big. Just go to the right of that. You see that spike to the upside.
Spike here.
So you're going way too far now. You were cold, hot. Go a bit left, hot. Yeah, that's it.
Here.
Draw a line at the lowest end of that candle. I just want to explain the difference in clarity in terms of
here. This is
no one up. Just go. Here. You see, that candle makes that pivot. Okay, so you see now that's much easier to read because that's a downtrend. You get the spike to the upside, and then it breaks that support, comes back for a retest, comes back down even further. You see that break and that retest? That's a much easier read. Does that make sense compared to where you are right now? And that's what I'm trying to say. Like if you look at charts and it's just not obvious, it's very difficult to read, and that is where we are right now. Like with definitely with the NASDAQ as well. Even though I am still bearish on it, in the short term it can pull back right up to the 200 EMA or what, but it's not clear. So the picture is not very clear on the daily time frame in terms of patterns or any key symbols that we would like to see broken and retested and so on. Yes. Does that make sense?
Yes.
So that is the ideal type of market you would like to be in. Because look, what EMA have you got there? Is that the 200 EMA?
Yes, just to show that yes, we are below there, and of course a lot of technicals show that we are below 200 moving average and everything. But like I said, I watched the COT report. I saw that we can get good risk-reward ratio for Aussie dollar. Fundamentals is on my side based on the basic fundamentals. When I removed the Trump, and like I said, this huge rejection on the January and that push for the US dollar to be weak and all that stuff just made me decision to make this order. Like I said, 10 days ago. So like I said, in the moment when I created, I have triggers, and because it's a daily chart time frame, I will just let it go. I will not touch it. I will just watch to see. So I want to be patient, and we will see what will happen.
Well, we know what you want. You want to be on the golf course. So
I nearly said on the golf course. I mean, when the markets are like this, you do want to be on the golf course.
So what's the advice we're giving everyone today? Take Friday off, learn golf. I mean, actually, if you think about it, it's good advice.
It is. I mean, I think it makes sense. Like today, I probably, I won't be trading today. For me, the week is over. especially after the open, when I saw the very strong push, I'm like, okay, that's interesting. Are we going to get a pullback all the way back to maybe yesterday's high? But then the next candle just dropped, and then the next, it was like, okay, I don't like these conditions. It just doesn't set up nicely. And what I mean by that is exactly what I just explained on the chart. It just needs to be like very clear, a very clear picture of what you can see, very clear downtrend, and then a breakout, retest, and those are the setups that you need to wait for. The rest is just not worth taking. You honestly, you're better off just staying in bed. Breaking even is a very good result.
Yes.
So
I've been meaning to ask you, talk about the NASDAQ, Jannie. Obviously, there's a bit of news a few days ago. I think we mentioned it briefly about the NASDAQ in about 18 months' time going 24/5, 24/7, 5 days a week. You got any thoughts on that and how it might impact it? Because I thought it was quite interesting.
Yeah, I don't really. What do they mean by that? Because you can already trade the NASDAQ, 23 hours out of the 5 days. So the pre-market, you can trade the market. You can trade the NASDAQ during the London session, Asian session. You can trade the NASDAQ. So when they say that, I'm like, what do you mean? Like, that's already the case.
Yeah.
So yeah. So for me, it's like I don't understand the news. So it's like I already place trades. Like I will trade NASDAQ trades, especially during the London Open. Some really good setups present themselves there. Sometimes, not always.
I think we need to dig a bit deeper into that then, because you're right, that doesn't quite make sense.
Yeah, so I don't really understand that part, but yeah, no, you can trade the NASDAQ. Yeah, you can definitely trade it outside of the New York trading session.
I'll get my PI on it, and we'll get some more.
Yeah. Where's your PA? Is it on the golf course? Yeah.
No, I have self-control. I don't need to distract myself not to trade. I'm so sorry, but I'm at that level.
Oh man, that's respectable. I can respect that for sure. Yeah, like I actually wanted to mention something about the win percentage rate. We spoke about this yesterday as well, Igor.
Yes.
And people's expectations about high win percentage and all that. And I'm talking specifically about trading the smaller time frames, not necessarily the 1 minute, but definitely day trading. Something like 80%, 90%, that's just ridiculous. Unless the only way you can achieve that is if your take profit is much, much smaller compared to your risk. That's the only time you can get a really high success rate. But you just need 2 or 3 of those bad boys hitting your stop loss, and then there goes all your profit. So that's the first thing. But if you have a success rate of, say, between 50 and 60%, I think one of the stats, like people always say, you need to understand what you're trading and the results that comes with it. So you need to understand your strategy, exactly what you're looking for. But you also need to understand the success rate that you can realistically expect, and also the risk-reward ratio. Did I already mention that? Well, risk-reward ratio. But when you have that information, it's not enough. You also need to know things like what's the drawdown you can expect. For example, maybe not drawdown. Yeah, drawdown. But things like maximum losses in a row. So if you have 3 losses in a row or 4 losses in a row, that can be psychologically very difficult to handle. But if you know that is statistically what you can expect, I mean, let's just have a look. Let's have a look, yeah.
Okay.
Can I just quickly share my screen, yeah?
Yes.
I'm going to involve a bit of ChatGPT in this session.
Cool.
You don't mind that? Cool, man. Okay. So let's ask him with a win rate of 50%. How many losses in a row can I expect over, let's say, 100 trades? So, and this is a very important thing to know, right? Because because a lot of times people switch strategies as soon as they have 3 losses in a row or even a 4th one. But you can expect with a 50% success rate, you can, let's call it 7 you can expect 7 losses in a row. This is a very important part of the equation that you need to understand about your strategy. So if you have a 50% success rate and you think, well, if I place 10, I should win 5 and lose 5. Well, maybe that's not enough trades. You need to have over a much longer period of time. What can you expect? So 7 losses, and that gives you a very good indication of how big should you trade, because that's a statistical fact. You need to account for that. So if you have 7 losses in a row, what's your account going to look like? And that will depend on the risk you're taking, right? So if you're taking 1% risk per trade, that means a 7% drawdown. Now, if you are with a prop firm and you only have 8%, then that's not going to do it for you. Okay, you can't take 1% risk per trade. If you know that based on your stats, you can expect 7 losses in a row. Okay, obviously that's the worst case scenario, but it's still statistically possible. So you need to make sure that you bring that into your trading plan. It's not just strategy. It's not just I'm taking 1% risk per trade, because a lot of as I said to you, if you have this losing streak or 3 or 4 losses, you can very easily lose confidence in your strategy and ditch it and look for something else. And that happens over and over again. I've seen it so many times. Yeah, but and that stems from a lack of understanding when it comes to these types of details. This it's really, really important to understand fully, what can you expect when it goes, it's not, well, I wouldn't say when it goes wrong, but statistically with a 50% success rate, which is very good, by the way. The world champion stock trader, Mark Minervini, his success rate is 50%, right? His success rate is 50%. So he loses half of these trades, but he is very successful because, well, we spoke about this previously, the risk-reward ratio. It's not just your win percentage rate, it's also your risk-reward ratio. And those two stats together will determine whether your trend goes up, your results graph goes up or down over time. But this is I just wanted to point this out, that because it is a problem that people, they trade something, they may have a bad day, tomorrow may be a continuation of the previous day, another 2 or 3 losses. And you need to kind of just accept the fact that that's just kind of, you can statistically expect that. And once you're aware of that, you're not going to be that much bothered. You're not going to lose confidence or faith in your strategy. You'll know, okay, I expected this. It's part of it. I understand how many losses I can expect. If you go way over that, then maybe you're doing something wrong. But I just felt this is a very important thing to mention. It is an important
point, because there's 2 factors to it, as you pointed out. There's emotional control and discipline, and if you don't understand the statistics, or you don't you don't log them and you don't work them out, you're just flailing in the wind, and your emotions will be with you as well, and that just leads to worse trades. And also the process of refinement. When you're developing a strategy, it's really important to keep track of your win rate and your loss rate, and because that's the process of essentially, refining and improving it and getting your success rate, wherever it needs to be. If that's 50%, then that's great for the market you're trading. And so many people don't do that. They just don't do it. And it's a problem.
Yes.
Sorry, Igor.
Sorry, just to add something, because you talk very good about this risk-reward ratio. There was a month, my risk-reward ratio was 1 to 1.5, and my winning rate was around 50%. I had 2% gain for that month. Next month, 50% again. My risk-reward ratio almost 2. I had 2 times bigger gain, 4%. So only from 1.5 to 2 risk-reward ratio was better, and that means two times more money for me. So
but you're leaving a very important component out there, and that's the number of trades. Right? It's if you make double the money, then maybe you place more trades or did you place exactly the same amount of trades? Because if you have a 1 to 1.5 risk reward ratio and you place 2 trades versus 10, with a 50% rate on both of them, you'll make more money if you place more trades. Does that make sense?
You have a ChatGPT. Can we put something in ChatGPT? So we put 100 trades. 100 trades. Risk reward ratio 1 to 1.5.
I said, is Igor talking the truth?
100 trades.
I spelled it wrong. I said Igor. Sorry. Yeah. Sorry, Igor. Yeah.
I think that if we put in ChatGPT and calculate, I think that we will double money just with the same number of trades, the same winning ratio, just reward ratio to be different.
Okay. If I place 100 trades,
50% winning rate
with a 50% win rate, and 1 to 1.5 RR, risking, let's just say risking 1%.
1%, okay.
Okay, how much money would I have made on a 50K account? I think I've got all the parameters there it needs. Right?
Okay, and another question.
Oh, there's a 1, sorry.
What will be with 1 to 2 risk reward ratio?
Yeah, I'm going to do that. I just want to get the answer for this one.
Okay.
So, we're just going to base it off 1% risk, 50K account. Okay, so 12.5. And then I'll just do that. And I'll just change that to 2.
Yes.
Okay, so what was the first one? 12.5. Oh, so wordy. Just give me the answer. Okay, so it's 25. So 25K versus 12.5. Is it 12.5? Yeah, it's double.
Yes, it's double.
Yeah.
So this is the equation, and it's very interesting. So everybody think only about winning rate, and they forget how important is risk reward ratio.
Yeah, it's like they go together. You can't remove the one from the other one. It's like it's one thing.
Yes.
Those the success rate and your risk reward ratio is they can't survive without the other one. Yeah. So anyway, that's all I wanted to mention about that. But yeah, a very important number of losses in a row that you can expect, and don't just ditch your strategy. And I mean, that does mean that you need to have enough data. You need to have placed enough trades to to have a good understanding of what you can expect in terms of the win rate. And as I showed you yesterday, Igor, the results for March so far. I mean, what was that? Yes, this is the March one, right? So if I just zoom in here, so 5.35% drawdown. This is this week from this Monday. I had a pretty good start, but look at that. I ended the week higher, but it was you can see this. Look at just this choppy kind of area. It's chopping to the upside, so that's at least good. But it's very different to the previous week. And that is what you can realistically expect. It just depends on what the markets throw at you. Right? It's not going to look all the same every single time. But look at the consecutive losses. 5. They were not all on the same day, luckily. I didn't place 5 losing trades in a row. But, this and the success rate, 54%. This hovers between 50 and 60%. Last week was 62%. This week was definitely much lower. But and this kind of ties in with what we just been talking about, like 54%. You don't need 54%. You can get away with 45%. You can get away with a lower success rate, but then you need to account for things like I just showed you on ChatGPT. It's like, okay, but if my success rate drops, then how will that affect my maximum losses in a row? And again, what does that mean for my maximum drawdown? Does that make sense? So you just and then you can adjust your risk. But it's about the number of trades. This is not 59 trades in 2 weeks is a lot, I know, but scalping, that's not unusual for scalping. But on a 50K account, that's 28%, risking 1%. Now, 1% is a lot.
Yes.
1% is a lot, especially if your drawdown, if you have a maximum drawdown with a prop firm, you shouldn't probably be trading 1%. 0.5% is more sensible, because it will give you double the amount of, or you'll get way more room if you're taking 0.5% risk. But yeah, anyway, so
no,
that's the results.
I think everyone needs to be looking at this sort of thing, and we're not sponsoring ChatGPT. We've got Claude AI you can use as well, or a calculator. But but I think the thing which I get from this, the message I get from this, apart from, of course, be organized. If you're doing trading seriously, then you need to be doing stuff like this. But the easiest way to improve your win rate beyond refining strategy is to know when and when not to trade, and don't force trades, which is a common mistake for beginner to intermediate traders. Because obviously right now, we're definitely in the kind of territory which is like, just go to the beach for a month and then protect your win rate and then come back when conditions are better. So there's a lot of factors, but
yeah, but I mean, even when you do, like, the thing is, like, even when you do wait for everything to line up according to your strategy, the fact of the matter is, like, they're not always going to work out. Like, especially on the shorter time frames. I think on the longer time frames, a candle that forms on a daily time frame, like if I just open the daily time frame here, a candle that forms on a daily time frame you can read a lot more into that, because it's the trading activity for the entire day, and that's going from the Asian session right through to the New York close. So all the traders that participated in this market around the world, it's the net. This is the net result of everybody participating. Yeah. So it's a much accurate picture compared to something
about the assessment of volatility, and how last week, we had a lot, and now we're just like pausing briefly, and you can obviously see that on the chart. And that, I was talking about with like Bruce and Howard yesterday, it's you can spend your time reading every news article under the sun, like President Trump's family is in talks to acquire a stake in Binance. Great, that's fantastic news. But it's like, if whatever's going on in the market will be reflected in the price action, you just need to be able to see it and assess it, which can give you some sanity, because you can stay away from the news. But yeah, that's good. Yeah. That's a good tip.
Yeah. So So what I'm saying is, like, if you are trading at smaller time frames, they not. You can expect, I'm not sure what win rate you can expect if you go on higher time frames, but definitely if you focus on the smaller time frames, don't aim for high success rates. It's just it's like going down this rabbit hole with no end. You'll spend years and years and years on the wrong thing, because you're trying to avoid losses, right? I don't know if you've ever been there. You just like, okay, I lost that trade. What have I done wrong, and how can I avoid this trade next time? No, that's not the right question. It's like, did I do everything right? That's a completely different question. Instead of saying, how can I avoid this loss? That is not a good question, because now you're going to go completely in the wrong direction. You're going to do everything you can to avoid that loss, but now you need to use that same thinking and apply it onto the next trade that follows. And then the next trade is going to be a loss. And then you go, okay, I made that change. If I didn't make that change and I just stuck to what I was doing before I made all those changes on the last loss, I probably would have won this one. Okay, let me go back to what I was doing. And then, do you see what I mean? Yeah, you can just like, you can constantly, you can just waste. Yeah.
Because like, I mean, there is refining a strategy by looking at a series of trades, back testing, whatever you need to do, right? And realizing that, what, I can make a change because I've spent a few weeks assessing it, and I think this would improve my win rate. And there's a difference between doing that and constantly just changing your strategy from trade to trade to trade, chasing those higher percentages, which obviously is a different proposition in crypto, because we can very easily get over a short period of time 60, 80, 100%, right, when the market's right. But the psychology of it is always the component. And by quantifying what you're doing and laying it out, it can give self-control, I think, which is important, obviously, in trading.
Yes, for sure. Yeah. So, sorry, I was just looking in to see what the NASDAQ is doing. It does look like it. The volume is drying up a bit. It's not a good idea to trade the NASDAQ after the first hour and a half on Fridays. That's just typically the case. It's pretty dead. You can even see on the 1 minute candles just the size of them wicks. You look at the wicks here, and it's not a lot of action. And I'm going to say that, and there's going to be a huge, massive move. Like, that guy doesn't know what he's talking about. But I'm speaking in general. I don't trade. It's like I don't have my success rate definitely suffers on Friday afternoons, and after the first hour and a half, going beyond that, it is just
difficult to trade when you're playing golf and your laptop's
that's so true.
It is. It's a different strategy.
Well, you guys think I'm looking at you. I'm actually playing Pac-Man right now, so I don't even know what we're looking at.
I have 3 things today.
Okay, let me stop my screen.
If Igor, how much have you got today? Let's get organized. What you got?
I have a couple things maybe to talk about. Maybe I wanted, because it's a Friday, to talk a little bit of my trading journal, but I can, after that, please you show your charts.
Right. Yeah, I'll do one. You do one.
Big mistake, Igor.
Be great. Be super organized.
Yeah.
Speaking
Let's
of
do it.
Failed trades. So this was let me just get this chart. Just give me a sec before I share my screen. Right. Just I do really think it's important that, because a lot of commentators and whatnot, they always just talk about the wins. And so can you see my screen okay? This is Litecoin. We got this?
Yes.
Yeah.
Okay, so yesterday I was talking with Howard and Bruce, and this is Litecoin, and obviously we're in a strong downtrend. If we just come out a little bit, I'll just get rid of the divergence because that's really clearing things up. So yeah, we're in a strong downtrend. We're losing each different range and we're coming down. So there was a potential trade which I was looking at. Obviously, everything's difficult right now, as you said. It's just a bit up and down. But we have this bear pennant, which is a symmetrical triangle, which is pretty, these sort of patterns are really quite good to control. But obviously, because with Litecoin, we are approaching long-term support. When we ever get any kind of bullish signals from Bitcoin, there's a lot of buyers which try to come in, which is why a short trade here is a little bit hairy. But the proposed trade was to essentially try and come in as close to the point of control here and this upper trend line. So you can maybe start scaling in here and then a bit here, or vice versa. So that was the premise, and just to get a kind of move down here. So we also were looking to try and get the probabilities in our favor, because this is not a clear-cut trade. There is a bearish bias, but as I said, because we're hitting the long-term support, it's a bit confusing. So I was looking for some kind of confluence out of the market. So at the time, Bitcoin dominance was sitting pretty, just approaching this support line. And support for Bitcoin dominance is essentially resistance for the altcoin market, for altcoin trade. So the idea was that we would get a bounce here, which we did, and the money flow would then go in Bitcoin's favor and allow my short trade with Litecoin to come alive. And obviously, we're trying to enter here at a really controllable point where if we do go in the wrong direction, we can get out, which is good. It did that. However, why did it go in the wrong direction despite a lot of selling activity? Well, what happened was I was waiting for the stock RSI to be oversold. The money flow was looking good. We had a little bit of a bounce. That was great. But Bitcoin at that time, which was about 10, when it hit my potential entry level, it was about 10. And this is where Bitcoin was at 10 p.m. It had bounced. not broken down, and it was in no man's land. It was like not at resistance, not at support. And as a result of this move and continued move, Litecoin then took this bullish momentum, and it just broke back into the pattern, because long-term buyers will start to come in here again. So the second Bitcoin does a bullish move, the trade invalidated. And as we now look at the money flow, we look at the money flow, we still could put in a higher high, but it looks like we're going to put in a lower high here, which could be the beginning of more bullish trading for altcoins. But this was an example of how difficult the conditions are. And this is an example of how, when you're trying to enter trades like this, even though you're going with the momentum, if you're coming to long-term support, it's a problem because there's buyers coming in. Coming in at this level gives you control. So I would say I was entering here, and then the market reverses, which it did. Okay. It comes up and then it comes back down, and it would have given me a no loss exit simply because I was trying to get in as close to the point of control as possible. So it would have been a enter, oh my God, my trade's going wrong, exit at no loss, and then live to fight end of the day. But this obviously is kind of what we're dealing with at the moment. The market's all over the place, and it's very difficult to trade. So I didn't enter this trade because I saw that Bitcoin wasn't where I needed it to be, and that stopped me, which is why it's so important with crypto. When you're trading, you want to answer 3 questions. 1, is your trade giving you the signals you need for a short trade? Now, in this case, it was, because this is a classic bearish retest, and we had support, we had confluence, it was good. 2, is the money flow in a place which, if it bounces, because we have to presume it's going to stay in the pattern until it doesn't, and we get a bounce, is that helpful for the short trade? It is. So we've got 2 things. But then when we look at Bitcoin, is Bitcoin in a place where we need it to be? And when I asked that question last night, it was no. So it was a no trade, because I didn't have all of that kind of triad of success, which I needed for a good trade. So I didn't want to hide behind that and be like, this is a great trade yesterday, and like everyone looks at it and go, well, actually that didn't work out. But this is why it didn't work out, and I didn't enter, so there's no risk because I was looking at the market. But any thoughts on that post-mortem, guys, from your perspective?
Yeah, I mean, first of all, that's again, it's very similar to me. That looks very similar, apart from the breakout towards the end, outside of that trend line. Prior to that, it doesn't look much different to the chart Igor showed us. It's just an ugly-looking chart.
Yeah.
It's not very clear. The picture is so distorted. So, for me personally, I mean, I would struggle to weigh the or stack the probabilities in my favor by looking at that chart. It's just not. It's very difficult to stack probabilities looking at something like that. It's like, oh well, you need to look at which is what you've done. I know you're looking at other coins as well, and you're looking at key support resistance levels, but there's not a lot to go off on, looking at that chart. I'm talking about prior to the breakout out of the upper ascending triangle line you've got there.
Yeah. And this is the important thing. Like, you have to recognize that the market is challenging, and you have to really follow your plan. So for me, 2 years ago, 3 years ago, I might have just entered this trade and just crossed my fingers. It's a bearish retest. We're going down, right? Because we're in a, but because the primary trend is but now I know that in order to keep my success rate where I want it to be, I need to, of course, put in safety nets and protections before I even enter. And as I said, we look at the money flow. Is that good? Okay, it was. But is Bitcoin where I need to be? And it wasn't. Therefore, I didn't enter. And the thing is, if Bitcoin had been kind of at this level, then I would have, like here, I would have entered the trade, because I would have had, everything where I needed to be. But as you can see, we're now having a bit of bullish momentum, and this was going to be the trade for Bitcoin I was going to suggest, because this, again, we've got these triangle patterns, and it would be a simple buy the breakout trade, and this is happening right now. So just to clarify what buy the breakout means for the uninitiated. So typically you'll wait for a candle body close above a trend line. Typically the hour is probably for middle-term trades, the one you want to look at. But sometimes if you're doing short trades, the intraday trades, a 30-minute is fine. But a decent time frame, a candle body close, which we haven't got yet, but we will in 15 minutes. And if it closes above, then you are looking to enter potentially on the retest if that is within your risk tolerance. If you want to have a safer approach and you're worried it's going to come back down, which you should be given the market, so you could do this, you could enter here and then hope we range in this and we go up. Or if you're really cautious, say for example this ends up being the swing high, then hello, what's going on there? All right, say that ends up being the swing high. The other strategy for buying the breakout would be to simply wait for the swing high to be surpassed and then enter, because that's kind of double bullish confirmation. But potential trade for Bitcoin here, but again, added confluence given the risk.
Yeah, I mean, if you just look at the other thing on that particular chart is if you look at the bullish candle count, there's a whole bunch of bullish candles in a row, and typically when that's the case, you have to wait for a correction. So before, if you are looking too long, because you can just look on any chart, scroll back, and how many bullish or bearish candles do you see in a row without sums?
What's that called again? A hammer candle? I can't remember what it's called.
Well, I can't really see that one. Well, it looks like let me zoom in. Yeah,
because this obviously shows that there's a lot of buyers coming in here.
Yeah, yes. Well, it looked like it was going to drop, and then the buyers just came back in. But that's a big bullish count. But just prior to that big move to the upside, if you can get something, just prior to that, that consolidation just before that up move, just go, nice. Go right there. No, go down, left, right. Yeah, there, right there.
Too cold.
Right there. Right there, because I'm actually zooming in here on the video so I can see it clearly. But there's like 2, 4, 5 candles to like ranging to the side.
Yeah.
And Igor, this looks pretty much identical to the chart you showed us. It's a sideways consolidation within a wider range.
Yeah.
Yes. Yeah. Does that make sense? So in this case, it broke out. So that's worth noting. And then, I wouldn't trade something like that, but. Yeah. Anyway, my point is just like if you get this breakout, I agree with you, Paul. With the pullback, so a retest. So basically, what that means is it could go a little bit further up.
The thing is,
before it retests,
this moving average is the problem, and this selling action here was a result of the moving average overhead. So the fact that we've managed to surpass it. This is good. This is the first bullish signal we've really had, because there's a breakout here, but we didn't get above the trend line. Now, obviously, I think we should be cautious here. And so there are 2 approaches. Buy the retest is fine, because again, you have control. If we come back down, we're probably going to touch it again. But this is again another potential entrance, right? So you've had a good bullish confirmation. We've had a breakout. This is great. But then the market is still in a bit of trouble. So we could just see sellers just taking some of their profits, and then this would be a better place to maybe enter. Again, you've got control because you've had a bullish signal, and this obviously is an ascending triangle, which has a bullish bias, and then you can maybe enter here again. So this buy the retest, sure. You've got the 1 day, which is good support, so there's a good solid argument for that. But the argument against waiting to buy here will be back under the 200 MA again. So. And that's bearish. So I think the only trade here is I buy the retest or wait for another swing high and enter there. But then you've got other challenges, because if you do that, you're in no man's land again. So probably the buy the retest is the safest thing if we get that candle body close in a few minutes. And just obviously you can, in a bull market, you can just buy the candle, once you get this closed, just jump in wherever you can. That's the bullish strategy. But right now you need to adjust and be wary of it. And I think just the one thing I noticed, which is really interesting, is the CME. So if I just show you this, so on the Bitcoin CME chart, which is futures, of course, we haven't lost the 1 day, right? Mm. And that's quite an interesting perspective, considering on the, so these are the sort of insights. I have so many charts open, and we've got a fair value gap, which I think we've probably just filled now. we need to look at, because part of the market is above the 1-day 200 MA for Bitcoin, right? Which is that the bullish kind of signals we need to see what's going underneath the hood. So I thought that was quite interesting with the open interest levels and so forth, and just obviously to see, because we're witnessing now kind of the first bullish signal we've had in a while. So good possible entrance, but you know, it's still messy. It's not great.
Yeah.
And let's just get this is the better position. This is looking,
but it's like it could be. I mean, because you just showed the 200 EMA, and it's not uncommon for price to do that around the 200 EMA, because everybody knows that's such a crucial level.
Yeah, like it does here.
Yeah, it's yeah. So it's a very typical response. Apart from the NASDAQ just kind of crashed through the 200 EMA, so that was that was different, but. Yeah, the 200, everybody knows that's a crucial level, so that's probably why you get that. But if you were looking to get into these coins, your overall long-term bias, I assume, is long, right?
Bitcoin, I mean, yeah, because here we go. So this is finally the first, but we've still got resistance overhead. We're still below this, well below the double top neckline. It's for Bitcoin, it's a really straightforward proposition. I'll find the right chart in any minute. So, we just need the primary trends on higher time frames like this to hold. It's that simple. Currently we are holding. I can't find the right chart. Yeah, here we go. So here's a log scale version. So this is the buy zone, perfectly natural bounce, and until this breaks, we're fine. A really nice kind of golden pocket with the 0.5. So Bitcoin's fine, but the problem is with the altcoins. This is the tussle, right? They're in the completely opposite. They're in a downtrend, and some of them are in negative price discovery. Not Litecoin, but some of them are, and that's a difficult proposition. So let me just show you this one kind of chart if I can find it. Let me just stop sharing so I don't give you too much of an insight into my messy structure, because that would be embarrassing, right? I'm doing my two things here, Igor. So I'm making progress to free up some time. So can you see this?
Okay.
So this is basically CME open interest, and this is the election, and we're pretty much now today reset to where we were at the election, and I think that probably answers that question. A good buy opportunity, but given the fact that half of the problems in the world haven't been anywhere close to resolved yet, it's dangerous, because if we come down and we start losing these kind of levels, it's Bitcoin might be fine, but the rest of the market challenging. So Bitcoin, yes, altcoins.
Yeah, you need to maybe you need to get open. Who was it I spoke to? Was it Michael? He's got he mentioned, I think it was with Howard. He has during times like this, he's got like just a play around account, and I don't think that's necessarily a bad idea, but if you are experienced, I think if you're a beginner, it's not a good idea, because you can very easily pick up bad habits that way. And if you do something that's going against your rules and all that, and it works, that's the worst thing that can happen to you, because I guarantee you'll do it again. You'll definitely do it again, because, in the heat of the moment, you'll think, I know I shouldn't take this trade, but it worked the last time, it's going to come up. And like it worked the last time. It was a pretty good trade last time. And then you'll start to having conflicts within yourself. You'll think you've got psychological problems and all of the rest of it, but it's just bad habits. The worst thing, I think it was I actually looked into this, like the trading psychology. There was a time when I went really deep into it, and I actually looked into things like gambling behavior, not behavior, but people who go to casinos, and why do they keep going back if they lose money? Why do they keep going? And the reason why they keep going is because they had an experience where it went well. Okay, so they had like a $5,000 win or something like that, or they had like an evening where it was just great,
You're
and they keep going.
The whole reason why they do like the £2, the £1, the $5, whatever, it makes you keep coming back because you believe you can get, but they don't you talk about probabilities and statistics. They don't properly assess. I mean, you know, what the statistics are, and really, you know, I won £1. Yes.
Yeah, this is
But
working.
It doesn't
this
get any
is working.
further. But I think to sum up one thing about the altcoin market, just on a Friday this week. So Bitcoin, obviously, we've got potential entry opportunities now. We've got this breakout. So this is good if you're looking to get into it. We have options if you're looking for a trade just to the next level with Bitcoin, which I think is the only thing I can recommend at the moment. You've got the next fib level, buy the breakout, buy the retest, try and just capture the move into this new range and just try and trade that. But with the altcoin market, you've got two scenarios. You've got altcoins which are at long-term support, historical long-term support, completely reset from when the bull run started 2 years ago, 18 months ago. And you're just looking for a reversal pattern. You're just looking for a reversal pattern to trade off, which will be, of course, you know, indicative of a stronger market. That's what you're waiting for. If you're wanting something to trade, and you want to kind of trade and benefit from the bearish sentiment, then you want to look at try and wait or try and find things which are in negative price discovery, because when they're in negative price discovery, there's no bullish sentiment whatsoever, and you can short them and do it that way. And we're going to cover more about that at the moment. But right now, that's the state of play. But if Bitcoin recovers, we'll start seeing these reversal patterns, and then it's kind of buy fear time, and that's what we're trying to get to. But I think we need another couple of weeks at least, and a little bit more calm perhaps. But I'm good for now. Igor, we got to hear from you.
Just add about cryptos, because I think a few days ago I asked you about when Bitcoin is going up or down when we compare to US dollar currency. And as I see, when US dollar currency consolidate, you said that it's a good time for Bitcoin to going up. And as I see your charts a few moments ago, I saw that from the March 10, if I remember, relative strength index indicator starting to go up, and I see very strong line for last 4 days. And I think that this breakout, I think that trend line on relative strength index indicator can hold that. So really good moments for buying opportunities. Not right now, but I think in next days will be.
I'm just trying to find that chart. What I think that you're referring to. It's the one with the googly eyes, if I remember correctly. But I'll see if I can find it and bring it up. But yeah, absolutely. It's, you know, we just want a bit of calm. But anyway, we need to hear from you. Come on, everyone's waiting to hear from you.
Yeah, let me.
Okay.
Sorry, I've got my. Sorry, Igor, you can share your screen now.
No problem. Let's first to show a little bit my trading journal, just to see this. It's on my language. Sometimes I put ugly words there because you don't know Serbian language here. So this is something that I use just for myself to fight against my thoughts and everything. And what I'm doing here, and maybe for beginner traders, for traders that watch right now this event, just when they think about trading, it's very important to have a good bias. And I struggle with that. The biggest problem for me that I'm trying to do, this is the column C, I'm trying to see where is the bullish bearish invalidation point. So above that level area, I want to be bullish. Below that area, I want to be bearish. And I have my targets. And of course, this is not my trades. This is not my trades. This is just, I wanted every single session to have idea about the bullish bearish point validation and targets. And I put in my trading journal my thoughts about that. And what I'm looking for, that several things align. For example, I want a trend line. This is the trend line. Is it buy or sell trend line on 30-minute chart? This is, for example, my bullish bearish level. And if I'm on the right side and I guess right everything, I put it green. If I'm wrong, I put red. just to see how much time my bias is okay. And I'm keeping around 70% of the time. So I'm right 70% of the time. But some month, if I go, for example, 65, 60% of the time, I see how my trades, I have a losing strikes, then I struggle. So that daily bias, or that, for example, UK session or a US session, my bias in that sessions, it's so crucial, because if I don't have right bias, a lot of bad decisions can go from there. So this is the something that I just want to share with you, just to see how that looks like. Sometimes I don't have a clear relative strength index trend line, so I put triangle beside there, because it's a mixed, and you cannot be sure what is that. And I write everything of that, put some comments beside that, my thoughts and everything. And later I use just for my statistics. So please tell me, what do you think about my approach?
I think I want to steal it and examine it.
Yeah. Look, well, just to talk about the bias. Yes, your bias is definitely the most important part, because that's where you start, right? If you are wrong about the bias, so if you have a long bias and I have a short bias, that's where our thinking's going to split, and you are going to stack probabilities that lines up with your bias. I'm going to do the same. One of us is going to be wrong, right? It's not for me personally. I'm not too bothered if I get things wrong. I'm like, okay, I'm wrong, get out. It's not a big deal. But your bias typically comes from Igor. I think you can correct me if I'm wrong, but when you say your bias, because I know you've mentioned you trades on the half an hour time frame. Is that right? 30-minute?
Yes. This is
so. Your bias comes from longer time frames. Is that right?
Yes, but I'm just looking for that session. Of course, I calculate for the longer time, but I want to find for that session where is my bullish bearish invalidation point, because you can go, you see the daily chart, and you can say 6 months I'm bullish, but it's not that. I want to guess the right low for this day. I want to know where is the resistance, where is the low, what can happen, what is the most possible scenario. I want to be very accurate, and this is why my bias is 70% true. So it's difficult sometimes, really difficult to manage that.
Well, not really. If it's 70% accurate, then I'd say you're getting it right. But would you say that there are some of the how can I put, specific patterns or so that you feel is causing more doubt than other things like support resistance, or could you find anything like that? Or
two things. Would you say, for example, this is the trend line on the relative strength index. It's really important for me. It will not change my bias sometimes, but I will never enter into trade if I have two different triggers on the different sides when I compare relative strength index indicator and when I compare my bullish bearish invalidation point. And the second thing, what I noticed, for example, that's very important for US dollar pairs, is a simple moving average 50 on 1 hour chart. It's not indicator that I use all the time, but I figure out that, if you're above that level, we can say that usually 65-64% of the time, using only that indicator, I can calculate are we bullish or bearish for that session, for example. So I think that simple moving average 50 is really good indicator that I can use for that. Of course, I need a lot of triggers, but I think that this is something.
Okay, and would you say, because this is just your bias?
Yes.
And would you does your success rate, because you can be right on the bias, but once you implement the strategy, you can still kind of get stopped out and wait for, and then you have to wait for a different entry. So do you think does your success rate also reflect your the success rate of your buyers, or would you say it kind of comes down a little bit?
Yes, but my winning ratio, for example, is a 50%, and my bias 70%. So of course, I made mistakes. I have problems. Sometimes.
No. I'm just asking if because I agree with you. Like your bias success rate will always be much higher than your actual win rate.
Yes.
Maybe that's not true for Bitcoin or those coins, because Paul, you guys typically focus on much longer time frames, and it's just a different market.
There's more opportunities for quick gains in crypto across the medium term, 3 to 7 weeks, right? But obviously the conditions right now are not that. So you're trading, obviously right now we're kind of how we are all trading is quite probably similar at the moment because of the market conditions, but crypto does obviously give us a bit more options when it's off to the races. So yeah.
Sorry, Igor. I just wanted to ask you that particular question on the, when you write on your bias, how does that reflect in your actual trading results? But if you get your bias wrong, if your bias drops, if your bias is really wrong, then you really going to struggle. Then your success rate of your trades is definitely going to struggle a lot.
Yes, a lot. So, you're completely right. It's sometimes 40-30%. I'm on the right side with my trades when I have wrong bias or my percentage decrease. So this is why very, very important thing. But in this journal, I'm doing one important thing too. I'm watching the news, and I'm trying to catch the moments when market is going in one direction and the news are completely different in other direction. So we have a news rejection. And I think this is the one of the biggest triggers that I like to see, because when that happens, it's a really next several days we can see strong bullish or bearish trends, and it's something that usually it's around the CPA, PPA, for example.
And is that something you add to your journal? Do you?
Yes. This journal we cannot see because in the March month, CPA, PPA was bad for US dollar, and the market didn't react. Nothing's happened.
Very weak reaction to core CPI.
Yes.
Very weak reaction.
But what I'm looking for, and you will see that I have a statistic for several years. For example, you have very bad results for CPA, for example, and for US dollar. And that means that euro dollar, British pound dollar should go up. And they go up 2, 3, 4 hours. And after that, starting to go down. And that day, we are bearish. Next several days, you can see the trend, crazy trend. So 300-400 pips down. Because when that happens, I know that institutional traders do not think about CPA, PPA. They're ready to go against that, and they are ready to against that. It's usually strong trend. And we have that, I think, in November, if I remember. It was a strong bearish move for British pound dollar, and we have the news that shouldn't be like that. So it's something that I really want to catch, because then in that moment, my short-time trade can become swing trade without any problem. Because what's happened then is something that I think that crypto traders like that. It's when you have 3 sessions in a row and price no legs, just going up or going down without legs at all. It's beautiful. It's really beautiful for traders, because you just make a trade, move your stop loss and break even, and you watch how several days in a row you just going up or down. So this is the beauty.
It's like with the CPI, context is everything. And we have a saying in crypto traders have a saying, which is, you buy the rumor, sell the news. And there is a strategy behind processing what is going on in the world, because obviously, say for example, it is a year ago, and we have the first positive movement of CPI in the right direction. That has much more significance than now, when we know that with the inflation data, we haven't really seen the impact yet of what is going on with the trade wars and the price increases. So the market understands the context that even though, yes, this is great, we've got relatively positive inflation data, but they kind of know that in the next few months, that's probably not going to be the case. And therefore, that's why there's been a lack of momentum. And so there's obviously...
Yeah, I agree with you. I think there's at the moment it's just there are much bigger things happening right now, that people are waiting for to get.
What have I missed?
What have I missed?
What is it? What's happening?
What are we talking about? What about this is me? No, like I was talking specifically about the news, man. The news, like the news is just like you were talking about the core CPI data and people are waiting for the next one. I personally feel like the news that's coming out now, we probably won't get the same reaction that we typically do, regardless of the numbers that comes out, because there are much bigger things happening where the uncertainty truly lies. Does that make sense?
Yeah, I mean, you think about, if you wanted, like, if I was back in the classroom as a teacher and I was teaching a lesson on kind of this sort of stuff, like news interpretation for trading, right? And how you could use it to improve your success rate. Here we go. Learning objective. This is what we're going to do. And it would be like, so what would be an example of, the worst possible scenario with noise? Anybody? Hands up. War in the Middle East. Well done. You're right. War in the Middle East. That would be terrible. War in Europe. Yes, if we had war in Europe, that would be very bad. What about somebody who doesn't understand the economy and they're running the world? Yes, that would be terrible. And then have we got all of those three things right now? Yes, we have. So then, Jimmy, Mohammed, tell me, is it a good time to trade? No, sir, it's not. And it's like, this is what we're dealing with right now. We've got like the trifecta of nightmare scenarios, and we're all just sitting here trying to figure out how to make sense of it.
Yeah, it is. No, you're absolutely right. But having said that, don't. What's that saying? Don't rest on your laurel. What's it? Laurels? Laurel? I can't pronounce that word. Laurels. Don't rest on your laurels. That one, because you need to be ready at all times. Keep an eye on the markets. Anything can happen at any time. So, if a bunch of people decide to get in, or they know things that we don't, which they do, we are retail traders. We are not on the inside. We do not have the information that those people have. So when it starts to move, you'll be able to see it, immediately. Like,
I mean, let me just. Can I just show you a couple of charts? I'm trying to get them ready so it doesn't look stupid.
Sharing this. Just add
just
something while you show the chart.
Oh, sorry, Igor.
No, just to add something. So about this news rejection. So I read that in the Market Wizards of the Jack Schwager book. So the question was about Jason Shapiro. He was a futures trader, and this is his strategy. Right now, last several months, I monitor everything that guy does. So I'm watching that, and he's incredible. So imagine that you have, for example, euro dollar going down, and in one moment you have a bad news for euro dollar, and price start to go up. In his reports, he explains how in this way you see what institutional traders doing, because they have a long-term trades. They keep trades several months, and they will not change because of the news, their pattern of what they're doing. And when that happens, I know that the big dogs starting to go on the other side. And this is why it's very, very good to know that strategy, to enter into trade as a contrarian trader, of course, on the important price level, but after the news rejection. So I will keep going to monitor that strategy, and one day I will show you more data about that, and I hope that you'll be surprised.
I want to see more of your spreadsheets. I feel like it's like the playbook for the NFL. Like I want to.
Yeah,
So-
but that's Sorry, Paul. I know you
Can you
wanted to
see
share
this
your
chart?
screen.
Okay.
Still loading. Oh, there we go. Yeah.
So look,
Okay,
this is like what the advice I think we can, especially in moments like this. you need to try and, we can't tell what the big dogs are doing, but we can get an insight into what they're doing. So as an example, when we were talking yesterday with the amazing Bruce and Howard, and how, you know, he was expecting gold to be a little bit more, it's bullish, but a little bit more strong. And the argument was, well, maybe Bitcoin is taking over a little bit of that role. And as you can see here, you know, the Bitcoin held by public companies is just continuing to go up and up and up. And likewise, this is a correlation chart between Bitcoins and essentially the global money flow, which is the M2. I'm no expert on here, but there's a 10-week kind of lead the M2 has. And if the correlation continues, you know, this also gives us an indication where Bitcoin's headed. And then you look at that CPI chart, where you see Bitcoin is above the 200 MA, even though it's below it on the price chart. It gives you an idea, just a little bit of an insight into what is happening under the hood, which is information you can trade off if you're trying to negotiate an entry. But it's, you know, you have to do a lot of research to get all of this kind of information and make sense of it. And that is part of the process. We should really do more sessions discussing about, you know, we've got psychological trading and how we do that. And then also, how do we process the news and how do we use that as tangible bullish or bearish triggers? And it's complicated, and it's a lot for traders to deal with, because to be a good trader, really, you've got to juggle 7 or 8 things, and some of which are flaming or they're knives or whatever, and you've got to be good at that. And it just takes practice, and you have to understand what you're doing. So multifaceted approach.
For sure. We just had a question about pound US dollar. Igor, that's your baby. We went through it earlier, but Andre, I think maybe you were not around to look at that. So Igor, if you can just bring that chart up, if you don't mind.
No problem. I will do that.
Thanks,
just
man.
To find maybe this chart. Okay.
So be very representative of my country's tenuous relationship with our Atlantic partners.
Yes, this is the chart that I'm watching for British pound dollar. Like I said, nothing is happening here. So everything is it's a slightly bearish right now. For example, I'm in some bias. My bias is bearish for this day. However, it's not for selling, neither buying. As you can see, we are just oscillates around 20 pips up down whole day. So this is this. Do you have some question about British pound dollar, Yanis?
Yeah, if you can just zoom in a little bit on that chart, if we can just look at, because you are on the half-an-hour chart. I can't remember which chart you were on earlier. Was it the daily?
This is the 30-minute chart. This 30-minute chart. Do you
yeah,
want to?
Daily? Yeah, the one we were looking at earlier. Yeah. So
this is the daily chart.
Okay, that's not the one we
we were watching Aussie dollar.
Was that the Aussie dollar? Okay,
Aussie
but
dollar,
really,
I can switch to Aussie dollar if you want to think. Is this chart?
No, no. I just want to because Andre was asking about the pound US dollar, so I was just making sure we were looking
no
at
problem.
that
This is the if what I'm looking for. Like I said, I'm looking for to sell. Maybe next week I will wait the price just to reach this area at 1.2940. I will see how what's happening price during the next week, and then I will try to sell it. But like I said, my bias, my daily bias is bullish, of course, but I want to see the pullback. The pullback, for example, it will be at least this pullback. And my favorite pullback that I would like to see is somewhere here at 1.2705. This is very important price level. And I hope that if we reach this level, after that, we can create another push higher. So I would like to see that, but of course, it's really hard to tell what.
It's a bit. The problem is, I mean, I haven't it at the moment. So a lot of with these tariffs, lots of countries are just saying whenever the US slaps a tariff on Europe, they just respond. Except my country, the United Kingdom, currently hasn't done that. They haven't responded. They've said, we just want to talk. Now, what does that mean? Does it mean that, the UK and the US are going to suddenly hold hands again and the sanctions will go away? Or is it just going to be continued chaos and negotiation for the next few weeks? And I mean, what's your take on that, Igor?
I think that politically, I think that the UK government, they want to avoid that, and they want to negotiate about all that sanctions and everything. So they think that that Europe is doing right now is not good, because the Europe really slapped the US. And I just saw that they increased the tariff and for chewing gums, for example, the Europe. So they're going with everything that they have. So not just
France doesn't take any nonsense. They're not going to take any nonsense.
So I just want to is it Rachel? I think that question was asked in this session, but it didn't pop up. Rachel, are you still there? You could just let me know if you are there. But there was a question like, what are some common indicators that confirm a trade setup?
Well, multiple is the answer.
Yeah, there's not like there's not a one sentence answer to that.
I mean, the breakout of a pattern with confluence in other areas, say the breakout of a pattern which aligns with the moving average, oversold conditions with divergence at the bottom of a pattern with probabilities to the breakout to the upside. So like a descending channel, divergence at the bottom at key support. That would be confluence. That would be a good trade. That's the sort of thing. But never one thing. It's never one thing.
Yeah, but I mean, but one thing, like one of the most important indicators, or I'll call it an indicator, is your support and resistance levels. It makes up for most trading strategies. Most trading strategies will look at support and resistance.
Yeah, I mean, it's like, is there, obviously not all support and resistance levels are created equal.
Yeah, but exactly, they come in different forms, right? The FIB levels are support resistance, but they come in many different forms.
With a, if you're barreling towards a support level, and there's a fair value gap and a huge order block, and it's long-term support, then that's a pretty straightforward confluence, and you just want to wait for a basic reversal pattern and whatever, and that's fine. But it's always multiple. What are the common indicators? The common indicators you need to enter a trade are multiple, right? That's it. Just it doesn't, and any given trade, it might be a combination of these four things, and then the market conditions will be different, and you need different indicators, and then it'll be three other indicators which are giving you confluence for that trade. It's like we talked about, like with crypto, medium-term trades is the way to make a lot of money in crypto, when it's bullish. But right now we're just kind of in and out scalp trades, and that requires a slightly different approach and different indicators than you would for a basic buy support medium-term hold. So I think you just count how many bullish ideas you've got on your hand, and if you get to your second hand, you've probably got a good trade.
Yes, right.
Okay, Rachel just asked another question. What's the best way to execute trades with minimal slippage? You should not have issues with slippage. Slippage usually comes in when you trade really big and you struggle to get your order filled, and then you are getting slipped. So I'm not really sure. Is that an issue for you? Do you get slippage? And if so, like what markets are you trading? Because slippage is not really, it's definitely not something I have struggled with before. But it's typically people who suffer from slippage is like if you trade like maybe like these penny coins, you just don't get filled and you get slipped. Okay, so you're not getting filled on the price where you press the button on. You're getting a far worse price. The other time is during news events. There you will definitely, but I don't know if you can call that slippage, but when the markets move during news events, that you shouldn't be trading during news events in the first place. But if you are trying to chase a trade, you see there's a big jump just right after the news event, and you press the buy button, you'll get slipped because, it's a news event, and you'll get filled at the first available price, and it will be one far worse than wherever you press the button on. But that's really the only other times where you'll get slipped. But does that answer?
I just want to add about building position, just to add a little bit. For example, I just watch US dollar Japanese yen, and I plan to build position. For example, this is the swing position. I take the daily chart, and what I noticed, for example, that price reached 146.3 level. And if we go in the past, That was the support in the February 2024. It was in January 2024, big support. And we can go in the past, believe or not, 10, 20, 30 years, this price level will repeat either as support on daily level, either or resistance. So it's very, very strong. And we see some push higher here. On the relative strength index chart, we are just broke the trend line. You can see that. We just broke the trend line. So what I want to see is, I want to see that we broke this trend line here. Then it will be some pullback or something, and then it will be continuation of the trend. And in one moment, I will enter into that trade. And of course, I have additional trigger. I monitor economy of Japanese economy. They have really good stats there. They're better. Of course, interest rate is not so good. America has, I think, 5.5%. They have 0.5%, but they increase their interest rate. And on the other side, US government, Fed wants to decrease their interest rate. So I just add one trigger, another trigger, another trigger, and in one moment I will create the trade after, like Paul said, after 6 triggers, I will create this trade. And
got no more bullets left after 6 triggers.
Yeah, I mean, but this chart is a great example because, right, the first bullish confirmation we've had is that slight breakout of the RSI, which is a good indicator to front run what the price action will do. Then you've got the breakout of that upper resistance line as your second confirmation. And then you've got the pattern and how it responds to that resistance line. And depending on your risk tolerance will depend on where you enter. And so it's a great example on there, a perfect example almost.
Yeah. Maybe it's not perfect, I can say, but for example, it's a process. I just want
pull
to
your
show
words back, Paul. Just say, okay, fine, it wasn't perfect. But it is a good example.
For example, I know one trader, his name is Joel Kruger, for example. I learned a lot from him. He's building position with multiple trades, for example. And I'm sure that in this right now moment today, he will create one small buy order for US dollar Japanese yen. And after that, another one. He has a system for that. And with those 5 small positions, by average, he will be very good, and he can keep that couple months and make a profit. So this can be interesting in various ways, and a lot of traders have different strategies about entering into trade. So I have one position, but other traders can use several positions when they build some strategy.
Are you able to just scroll left a little bit, Igor? Just scroll left a little bit, so just so I can see a bit more of the chart. In the future price space, just go back a bit. Can you just bring the pattern into the middle a bit?
Just while you're doing that, Arcus FX. I'm sorry if I butchered that. Is it Arcus FX?
That little. If you see Igor, if you could you see that little pocket where the diagonal support line intersects with the lower support line. Just right a bit. We're doing this colder.
Like this here.
Yeah, right. Keep going. No, keep going.
Oh, gee. You should have started at the right hand side.
There we go. So that pocket, right?
The very last candle. You should have just said the very last candle.
Spot on, right? So that little pocket where, say, for example, that diagonal trend line intersects with the lower support line, right? That's the sort of thing I look for, like that confluence of just 2 support lines. Because really, so if it gets rejected now from the upper support line, exactly where your vertical line is a nice little pocket to buy at, where it intersects with the diagonal trend line, because that is obviously, you've got a set of buyers on the horizontal support, you've got a set of buyers looking at the pattern. And pockets naturally gives you inherent confluence. So if you just spot those, you've already got an edge, especially if it hasn't properly touched that trend line yet, and it hasn't done it for a while. There will be buyers to show up. So it is a good, okay, not a perfect example, but it is a good example of how you could potentially trade.
Yeah, for sure.
Yes.
Okay, I just wanted to make a comment on. Can you guys hear me, or can you not hear me?
Sorry, what? Yes, I can hear you. We can hear you.
Okay. No, I just wanted to make a comment at the slippage at some bucket shops is a thing. Yes. That is definitely true. I don't think there are some really dodgy brokers out there. I mean, I worked with someone this is a couple of years ago now, and he said to me, they reversed my trades. Why would they do that? I said, they reversed your trades. And what? I said, no, that's definitely no. Get away from that broker. Just get away from them, right? Because that is they will never do that. So yeah, Rachel, if you are still watching, if you are getting slippage issues, I'm not sure what you're trading, but yeah, especially if you get your trades reversed and things like that, that's definitely fishy. That's definitely fishy. But the bucket shops, they used to be in. Do you remember this spread betting industry? No, sorry, not spread betting. Binary options.
Yes.
You remember binary options? There was a very big company, 24 Options. They obviously don't exist anymore. Yes. But they were also like that. And it was just a pure bucket shop, big time. Yeah. So yeah, and this was many years ago. Say again.
Well, it's be careful out there, right? I mean, it's not every whatever it is type of institution supporting your trading. Not all of them are created equal, obviously, as we know, as we see. So, but yeah, I think we've run out of time, guys. It's fantastic to end the week with you all. It's great to see you.
Yeah, just like the very last comment, I'm so sorry. I think Paul, you can pronounce it better than I can. Sugadi? Sorry, please forgive me. It's good to have different perspectives of the market. Yeah, for sure. I think it's very, very valuable. I mean, we all know trading can be a very lonely sport, and you can be isolated in your own little world. It's always great to, even for us, I believe you guys will agree that it's great to talk to other traders and just to get their insights and see how they look at things. And it's just it makes it very interesting. And
because it's a case of take what you think works for you, whether that's the way Igor approaches the market, and just take it and use it. And if you prefer that if you prefer, yours, Jannie, then that's it. And this is why we're doing it. We're trying to have a discussion. We're trying to meet in the middle and take what you can and improve your strategy based on that.
Yeah, and for the people watching, you will come across things that you go, oh, I like that idea, and maybe you have your own way of trading, maybe not, but you can just you don't have to trade exactly the way we trade. You can just pick bits of of things that make sense to you. Go, yeah, I get that makes sense to me, and then use that and work on that, and build something around that idea.
Make it your own.
Make it your own for sure. Yeah. Okay, guys, but again, it's been great talking to you as always. Have a great weekend. I'm gonna have a beer now, so have a good one. And I'll see you guys next week.
What time does the golf course shut, Igor?
What?
Yeah,
what time does the golf course shut?
I don't play golf yet. I'm not rich.
We'll get you there.
Practice. Practice.
Have a good one, everybody.
Have a good one, you guys.
Bye-bye.
Bye-bye. Bye.
Hey,
How you doing?
hey, I'm great. How are you, Howard?
Yeah, very good, very good. What a week that has been.
Oh
It's not over.
man, oh man, it's crazy. That's all I can really say. Definitely been a tough week for me, at least. Definitely had some break. I took 2 losses, had some break evens, had another break even. I'm like, what in the world is going on? This is a tough week for me.
Yeah, no, it's not been that easy, I think. But yeah, for me, the big one was the gold.
Yeah.
And yeah, a little bit boring on the euro dollar and stuff like that. But I think maybe today we start to see a bit of a breakup, and yeah, so interesting end to the week.
For sure. I agree. Well, cool. As usual, guys, if you guys have any questions, of course, let us know. Let's see. Okay, look like we got a few from the last session here. Cool. Well, yeah. As always, I always kind of like to do a quick intro. I'm sure you guys already know, but just a quick pitch here. Again, I'm Mike. And I am one of the coaches and traders here at Ola Prime. Been trading for over 11 years now. Past most of them has been failing. About 7 or 8 of those 11 years been failing. Just now found profitability in the last 3 to 4 years. And currently a full-time day trader. This is what I do for a living. Outside of some coaching here at Ola Prime and another company as well, where we're just kind of guiding and teaching different students and developing and new traders. Yeah, I'm mainly, again, a day trader. I'm in and out of my positions for the most part, same day. Also primarily focusing on currency pairs, right? Of course, a few NAS, a few US 30, a few S&P, gold. So a few other markets as well, but primarily currency trading. And as you guys will see here when I get into the to everything, it is the market maker structure. So trading order flow here. Yeah, that's pretty much everything about me. I know we do this every day for the most part, but you want to go ahead and do yours, Howard.
Yeah, sure. So yeah, I've been in the markets one way or the other for over 30 odd years. Yes, I started way back in the kind of like early 90s doing short-term foreign exchange and futures analysis. I got into kind of systematic rule-based stuff in the late 90s. And I've been for the majority of my career basically either trading or doing analysis, or more recently since COVID doing a lot of trading education, kind of one-to-one, and also webinars, that kind of thing. Trading style, I tend to be I use Elliott wave for kind of long-term, to give me a long-term view. I'm looking for wave structure, for example. I'm looking for completion of 3-wave ABC moves. If I see those, then I'm really on it, looking for a resumption of a trend. Also, if I see an end of a 5th wave, then I start to look for a top or a bottom, depending which way that goes. With regards to the trading, I'm much more shorter term, so I zoom in after the getting the directional bias. I like to look at previous day's ranges to give me a bit of daily bias going to the next day. And I've got my trigger levels where I get in and look for a continuation of the previous day's bias, or maybe even a reversal of it, depending on where the trigger levels come. So that's essentially what I do. I focus mainly on currencies, but I look at everything, and sometimes I'll get some pretty good views on things outside the currency markets, and obviously gold has been quite interesting this week in particular. Yeah. Do you want to go ahead, Mike? Do you want to go ahead, Michael, and go for your
sweet. Well, cool.
charts first?
Yeah. So I was looking at a few things here today, and as always, guys, if you have any questions, please let us know. So let me go ahead and share my screen here. Cool. So this darn EA today was so interesting, right? So you guys know, as I always mention, the same pattern, right? And just a quick recap, guys. Again, at the top here is my chart. The bottom is my TDI, right? And on my chart, I have a few EMAs here. The red is the 13 EMA, the blue is the 50 EMA, and the white is the 50 EMA, right? And at the bottom here, I have my TDI. And then on my TDI, I have a Bollinger Band. Inside the Bollinger Band, I have an RSI line, which is the purple one. I have a signal line, which is that reddish pinkish one. I have a market baseline, which is the yellow one. And then I have this static 50 line, which is basically, it just stays here. It's the dashed, the white dashed one. So I use these two in conjunction to find my bias, my confirmation, and just overall order flow. Right, so starting at the top, how I always do, guys, if you remember, right, I'm always looking for this this structure type here, right? So I can know where I am in the cycle. It's like the most important thing for me, right? And as I always say, I'm staying away from this area here, which is the peak high, and then I'm staying away from this area as well, which is the peak low, right? I'll just type these on here. Peak high, and then obviously this can be inadvertent as well, so it could just be a peak low. It would just be going the other way around, right? And then I got my peak low, right? So I'm staying away from those two peaks, and I am only focused on this area here and this area here, right? For me, this is level 1, right? And then this here is level 2. All right, and then I'm able to determine these by these EMA crosses, right? So you kind of, I'll just leave that alone. So in essence, as you can see here, I have this. Now this is kind of ugly, but it's still there. This ugly little M structure, right? And then I got this run here, and it kind of broke that level. And then I have my 1350 cross here, right? So that signifies that, hey, I'm coming out of this peak and I'm getting into level 1. And obviously when I get into level 1, I am interested in taking the trade right there in level 1, or right here in level 2, right? Now what determines this is, once I have this 1350 cross, which is right here. When I say 1350 cross, I'm referring to the EMAs, right? So the 1350 EMA cross. Cross. So once I have these two here, the next thing I'm looking for is this first pullback to the 50 EMA. And as soon as I get that interaction, that's when I started looking to enter my trades, right? So I'm looking for this break of this area, right? We can say this area is probably somewhere within here. Right, we just pull it all the way out there. So once they broke this area here, I'm looking for this first pullback, right, to this 50 EMA, right? And then from here, I'm looking for some type of pattern off of this 50 EMA, whether it be an M or just a bounce. And then I want to ride this to the 200 EMA for the first time, right? The very first touch to the 200 is where I'm trying to take this, right? So in this particular example, it gave us everything we were looking for, right? We got the, as I always mark up as well, when I come to the charts, I'm looking for a few different things. One would be, where am I in the cycle, right? 2 would be a pattern, right? 3 would be higher time frame confirmation. And then 4 would be entry signal, right? So I'm looking for all of these four main things to really match up when I'm getting going here. And it's kind of funny how you see I say the same thing every day, and these patterns kind of play out right on the chart here, right? So cool. All right. And if you guys got any questions about all of this and how this is set up, please let me know. But cool. So getting back into it now, this first entry, right? I'm asking, where am I in the cycle here, right? So I can tell right away that I have this peak formation up here, right? Which of course I am not interested in, right? As I always say, this is a peak high. I do not want to take that. I'm not interested in the peak high whatsoever, right? I'm looking for that break, which that break happened right here. That's why we have this 1350 EMA cross. And again, I'm looking for this first pullback to the 50 EMA here. All right, now zooming in, what I really want to see here is I want to see a nice close below the 13 EMA here, right? Now, when I say it has to be a nice close, it can't be this baby candle like this one. This one doesn't count. It's ugly, it's little. This could easily turn around and just not do what I want it to do. I'm looking for an actual close like this one, right? Looking for an actual close like on this candle. It closed below this previous structure. Everything was nice about this. Even when I look on my 4-hour chart, I can see that price is actually below the 13 on this last candle. So I'm good to go with my 4-hour confirmation, right? So one is I know where I'm in the cycle. I'm coming off that peak. I'm into level 1. 2 is that pattern. Do I have a pattern? Yes, I do. I have a pattern off that 50 EMA, right? The nice M looking structure. 3, do I have higher time frame confirmation? Yes, I do. This last candle is below the 13 EMA, right? So I do have 4-hour confirmation. And then my last thing would be the entry signal, right? The entry signal will be this close right below the 13. Once this happens, I am all over this trade, right? So I put my stops right above here. My target is here at the 200 because I'm riding it to the 200, right? I got me a nice 2-1 for 2.5. Gorgeous trade. In fact, I'm going to erase all of this just to get a little bit smoother. Right, so right here, stops above here. TP is right here at the 200, right? So beautiful trade on this entry. And what happens? It doesn't go. This thing does not go the way it was supposed to, or I envisioned it, right? So on this first one, it does not, this position does not go, right? Now my exit signal on this particular, not this particular, my exit is always the same, which is how I'm looking for an entry to be a close below the 13. My exit would be a cross back above the 13 EMA. So as you can see, this very next candle kind of did it. But in addition to that, I also need price to cross back up to the upside as well, right? So on the price, it did close back above on this green candle. But on the TDI, as you can see, I also need these to agree, as I mentioned. So the RSI line, which is the purple one, needs to cross back above the red one as well. That did not happen on this particular setup, right? So I'm still in this trade. I'm still in it. I'm still in it. I'm still in it, right? So I didn't close it on this one. Now this candle, now it's looking bad. Now I have to look at this again, right? Did the signal line cross back above the red one? Yes, it did, which means I had to close this trade, right? I had to close this trade at a small loss. It was about, this measures. So close this from here to here. Yeah, so about 27 pips, 25, 27 pips, somewhere around there. I had to close this trade once this closed back above, right? Now from there, this trade is still in play right? If this turns around and sets back up, which it did, right? So if you can see here, let me delete this, right? So this, I'm still looking for, as long as price is below the 13 EMA on the 4-hour chart, so I have my higher time frame confirmation, and I'm looking for this to close back below, right? So now on this particular candle, this looks even better, right? Now I have a real nice looking M structure, right? We got the 1350 cross. We got this M thing going on here. This looks good for the shorts, right? So once this closes again, guess what? I am back in this bad boy, except I can't take trades this late in the day, right? It's 2 freaking o'clock. So I'm like, what do I do? What do I do? This is horrible. I want to take the trade, right? I don't take trades going over into session changeover. So as you see, this was at 2 o'clock Eastern, and 1, 2, 3 hours, it basically closes and is going to the 8th in session, right? So what can I do? The only thing I can do is to wait and hope that price doesn't run too far in the next session, right? So Asia opens up here. That's what this box is, by the way. This is the Asia session. So Asia opens up, and I'm looking for a nice close below. At this point, I want to close below all of this area, right? And what candle does that? This red candle right here, right? So once this red candle closes below all of this structure, and yes, guys, this is at 10 o'clock, something like that, right? So I'm back in this trade, right? On my second entry, I only get 2 shots per trade. If this didn't go, that would be it, right? So my stop will be above here. My TP is still the 200, right? So now instead of me getting a 2 for 1 for 2.5 nearly, it's only a 1 for 1.5 nearly, right? Risking $1 to make $1.38. So at this particular point, I end this trade again, right? And then I'm looking for price to reach to this point, right? Because what I'm looking for is this area here, which is the yesterday's low. That's why I have these blue dotted lines here. So I'm looking for price to get below this area, right? Once, it don't need to close as long as it touches it, which it did. Soon as price touches this area, I'm moving my stops to break even. And this is a risk-free trade at this point, right? So I'm moving my stops to break even. And lo and behold, what happens? This thing turns back around. I'm moving my stop to break even, and I'm taking partials, right? Normally on a setup like this, I will put my full position on because this is my A+ setup, right? So this is my master trade setup. And then on this setup, right, I'm risking, it's an A setup, so I'm risking my full 1%, right? The only thing about this is I don't risk full percents on Asia setups, right? So actually, when I re-entered this trade, I only took this for a half, right? So in this particular example, when price moved to this area and I moved my stops to break even, it took the risk off the table. And I also took partials, took halves. Instead of it being taken half, it was actually only a quarter, since I only have a quarter on, right? So I'll only end up making a quarter off of this position, right? And then what does it do? It pulls right on back and it takes me out at break even, and that's it on this particular trade.
Choppy market, very choppy.
Yeah, this did not go the way I expected it to. This is definitely my A+ setup, and I thought this was going to go right to the 200 like it typically would do, right? And it didn't. Now some of you may ask, oh, I'm sorry, go ahead.
Yeah, I was to say, you know what's going to happen. It's going to happen in Asia. You'll get the big move in Asia. Yeah.
Or it's going to happen over the weekend, right? Like you come open up Sunday morning, and
boom.
then this will be all the way down.
Yeah.
Well, Sunday afternoon, then this will be all the way down here.
Yeah.
Crazy.
But yeah, I mean, a bit when I come onto my charts, I'm getting very similar signals in the Aussie against the US as well, but obviously the other way around. And I'm kind of in there looking for the break to the upside in the Aussie against the US. So that'll be the same kind of thing as short Euro Aussie. So now
Yeah.
I'll come to that a bit later on when we look at my stuff.
Okay, sweet. So yeah, that's how this one played out. Now, some of you may ask, like, hey, it closed again on the 13 EMA here, below the 13 EMA here. Do you take that again? The answer is no. This second setup over here, this is not a setup. This is just you trying to win your money back at this point. So even though you could have theoretically taken this trade, let's see, yeah, sure. Could you have taken this trade here, put your stops above, right? And still went for the 200? Could I have done that? Yes. However, for me, this is not a setup, right? The setup was over there, right? The setup was on this red one, and the setup was on this one, right? And again, you could have taken this too once you close it. But this over here, I'm going to change this to another color just to make it a little bit easier. Let's do yellow. This yellow one, that is not a setup. Like, there's no name for that trade, right? So again, my trades are, I got 5 setups in my playbook, right? 1 is the master trade, which is this trade we're looking at. 2 is the combo trade, right? Which is a combination of 2 trades in 1. 3 is my ID 50 trade, right? 4 is my M or W off the 200 EMA. And then 5 is my money trade, right? I have a name for all of these. They all have characteristics. All of them have a particular setup and things that need to happen, right? That's how I can pinpoint my master trade, like what needs to happen for me to take this trade, right? But this yellow one, like this trade over here, this is not a setup. This is what I would call MSU. You're making stuff up. Like there's, right? You're just guessing in essence to say, hey, it hasn't hit the 200 EMA yet. Let's just get back in. There's no real setup for that, right? So this is actually nothing for me. So yeah, that took me out at break even after I took only a quarter of profits off of it. So that sucked. And so that was everything on EA, right? Now, I also was looking at UC. Was it UC? Yes, it was UC. As you can see, this one never, ever played out, right? So let me give you my scenario here. This particular setup would be the trade number 4, which is the W off the 2000 EMA, 200 EMA.
Long term.
Right. So for this to happen, obviously I need a few things. First thing to happen is I need my 50-200 to cross. Right. That's the very first thing I need. From there, I'm looking for, hence the name of the setup, a W off the 200 EMA. Right. Remember, my white line is the 200 EMA. Right. The white one. So you see this nice little W structure here, and it runs up. Right. I was looking for a bounce here and then going long this way. Right. If you guys remember, I'll just do the bottom of it, but that W structure here, right, that break, then that retest to go higher, right? This is that, right? Right, so this is that move, right? Actually, I'm sorry. This actually is trade number 5. I'm looking at the W and I'm thinking of trying to take that, but I actually was looking at number 5, which is the money trade, right? The money trade happens after that M or W, right? So I got this 5200 cross, then I have this W structure, right? So that's giving me further confirmation that, hey, this is going long. I also have my, as you can see, my reload here, right? So market baseline here started going below the static, which is this white line, and it's coming back up. So I have this reload. I'll just put R for reload. And the next move that will happen after that is this bounce going long, right? Simultaneously, on the chart, I'm looking for this same exact move, right? So I'm looking for this to kind of bounce off this area and close above the 13. That's why if you look at what my entry would be and where this, as you can see, I use the alerts, and as you see, it says USD CAD money trade, right? So I was looking for a bounce off of this 50 EMA, and then a close above this 13, which is the red one. If that would have happened, I would have taken this trade. It would have been a nice, actually, you could have took this to the 80-yard high. This would have been a nice 1 for 2.5 on this particular setup, but clearly this did not go. We had news at 10 o'clock today, and this is when this kind of started going to, you know what, from there. Kind of just faded out the other way. And this is another reason of, hey, why it's so important to make sure that you have your confirmations, right? Because you could have easily just jumped into this trade early just because, right? Let's just show this, right? At one point, this green candle was a solid candle, right? And it would have looked like, oh, this thing's ready to go. Like this would have been solid. You would have jumped in like, oh, I don't want to miss the move. I'm going to just take the trade. Right? And you would end up taking the trade. Yep. You got to wait for the close. Got to wait for the close because this exact thing could happen. Right? Well, I got this on backwards. But yeah, you see this green candle here. This actually when I made the alert, waiting for this to actually close before you enter the trade. And what happens? It comes all the way back down. Right? Closes below the 13. So you never got the entry candle. And it just goes the other way from there. You would have got stopped out had you taken that trade early, right? So super important to make sure you always follow your strategy. And obviously, you know, you need your entry candles, entry confirmations. And then I was looking at, so that was USD CAD, and I was looking at one more. What was that? Man, I might have to go through the top here really quick. I know I left it on here. Which one was that? Oh, I think it was EN. Yeah, I think it was EN. This is the Euro CAD. EN. Okay, yep. So here it is. Sweet. So this kind of gave us the same move as EA did, right? Euro AUD. Now, if you can picture this once again, you guys know I gotta do the pattern just to point out to state the obvious, right? Break, retest, break, retest, right? So as you can see, this is coming out of level 1, right? Because we got our peak up here. Once that peak is in place and this break, I'm looking for that retest of this exact area, right? I want to take advantage and exploit that area right after a peak. And you can see clearly that this exact thing happened right here. Right? So once again, we got our funny looking M. This is not even a real M. It's kind of funny looking. But we got our run. And it's the first pullback to the 50 EMA, right? We got the 1350 cross that locks in this pattern for me, right? So I can tell that this, once again, is the peak. Right? That's the peak high. So after I see this peak high has been put in place, the next thing I'm looking for is this first pullback to the 50 EMA, which is literally right where this vertical line is, right? The only thing that was wrong with this particular trade was technically, and you got to look at this closely, on this particular vertical line, as you can see, price is actually above the 13 EMA on this particular candle. And we needed it to be below, right? So this is actually a pass. This is a pass, this is a pass, this is a pass. Why? Because there's no higher time frame confirmation. My number 3 on my list that you guys always see me draw out, right? Where am I in the cycle? 2, pattern. 3, higher time frame confirmation. 4, entry signal. Right? I got number 1. I know where I'm in the cycle. I can see that I'm coming out of this peak high and I'm going into level 1. Right? That's why I got this 1350 cross. And I can tell I'm in level 1 for several reasons, but mainly because there's a 1350 cross here and my 5200 has not crossed. Once my 5200 crosses, then I know I'm in level 2. Right? These two would need to cross, like this would need to cross. And then here, once those cross, then at that point I'm in level 2. Right? But for now, I can tell that I'm in level 1. So I know exactly where I am, right, in the cycle. Right? So I got where I'm in the cycle. I know exactly where I am. Do I have a pattern? Yeah, I do. I have a nice pattern off the 50 EMA. Number 3, do I have a higher time frame confirmation? We just went over that. No, I do not. My higher time frame confirmation, it is above the 13 EMA. So this is a pass. There's no need to even go forward. There is no entry signal because there's no higher time frame confirmation. Right? So that was it as well. And I think I had one more, but I'll go ahead and pass it over to you, and then I can probably switch back. I need to find
it. Sure, absolutely. Yeah, we can go back and forth, no problem.
Okay.
Oh, okay, cool. Let's get my screen up there. So,
do you realize, Howard, that I kind of go over? You see, like my work down, my process. It's the same thing every time, and like it's clearly right there on the chart. So you can kind of see how I'm navigating it all.
No, it's always good to have like a structure, and so yeah, when the markets get a bit crazy, it's always good to know exactly what you should be doing, because in the heat of battle it can be a little bit a bit difficult sometimes, you know.
Exactly.
Okay, so yeah, I started the day off with a couple of long entries on euro dollar and euro yen. Looking for kind of well, literally a continuation of the recent trend. So just sort of kicking it off with the daily on euro yen. What I did was what I like to do obviously is identify the trend and then look for a good down session if it's an uptrend, and then I like to buy the retracement of that down session. A little bit like we looked at gold a few days ago, where you see that kind of one shot against the trend, and then I think, okay, that's good. Next day I want to be buying when they cover their short positions. So I kind of did that on both euro yen and euro dollar this morning, and kind of grabbing some profits as we went up towards the the recent highs. So this one, I think it was just below the day's high. I got my second exit out, which was quite good. I'm now, it came back to break even on the last third of the position, so flat on that one. And euro dollar, the same kind of idea, where so we had a 2-day correction against the downtrend, against the uptrend, and early today we got the upside break. I bought the upside break, and then basically got out of break even on that one. We got the break of the on the intraday chart. That was really where I got in on the break of this point here, and we got this run up. I think the target was literally above the high of the day, but didn't quite make it, which is a bit frustrating.
Right.
But eventually I stopped I stopped myself out at break even on that trade, so that wasn't too bad. A bit frustrating that I didn't quite get the first profit target, but today was not really the day for trend continuation there. What you were showing on Euro Aussie and Euro CAD and Euro Kiwi, I think that's a little bit reflective of what we're seeing in the currency markets, where the euro has been particularly strong lately, but now last few days it started to slow down a little bit. And I think we're seeing a bit of rotation into those commodity currencies like the Aussie, Kiwi, and Canadian dollar. So they've been underperforming lately, while euro dollar and sterling dollar cable have gone higher. But I think they're starting to catch up now because gold is settling at these higher levels. So I think there's definitely a bit of catch up in those markets. Which kind of brings me to my current two trades. First of all, dollar CAD. I've been probing this one from the short side the last few days. On the daily chart, we've got that kind of trend line that comes in from the peak going back to February last month. So we had a couple of days ago, we had that push higher but slammed lower. So that kind of long upper shadow on the candle there, and then breaks down the next session. Yesterday had a bit of a pullback against it, and today we're starting to see a bit of weakness. So it seems to me that we're getting a little bit more selling ahead of this trend line, and I think eventually we're going to start to break lower and play catch up with with dollar against the other major currencies. On the shorter term, I've got this kind of head and shoulder thing going on dollar CAD. Yeah, so essentially we had this kind of 7-wave move to the head, 1, 2, 3, 4, 5, 6, and 7. And in Elliott waves, 7 waves is always going to be corrective, which means it's a weak structure, which is going to be completely reversed. So this actually ties in with that kind of head and shoulder top idea. It's a bit early. I've taken a stab at the short side here, looking for the breakdown. So some might say it's a bit risky until getting in ahead of it, but I'm kind of anticipating it a little bit so that hopefully once we break down through the neckline, I'll be in and I can get my stop loss to break even very quickly. But this again is something. I know we've got a weekend coming up, and anything can happen over the weekend. But for me, the balance of supply and demand is really that this thing is starting to curl over. So it might just be that we get a move higher in the commodity-related currencies over the weekend or Sunday going into Monday. So I'm kind of short in anticipation of that breakdown. So that's Canada. The Aussie, a similar kind of picture on the Aussie as well, but obviously you need to turn the chart upside down. Just kind of starting on the monthly, the big picture here. So it's been kind of trending lower for quite some time. So euro dollar has broken higher. So we've seen the dollar break down against the European currencies, but Aussie has really not really bothered to follow through. But interestingly enough,
I've seen that today.
Yeah, we're starting to see a little bit of accumulation, I think, come in at this big level here. So even if you're not bullish on a long-term basis, if you think maybe we're stuck in this range and maybe we head towards the middle of the range, this could be a kind of a early warning sign that we're getting close to maybe some kind of bounce. So for me, I'm looking for early entry into a rebound, which should see this back into the middle of this range at least. Coming to the daily chart. So what we've got here is just on the Elliott wave perspective, because I like to look at Elliott waves to give me a kind of an idea about the structure. And what we've got is quite a nice bounce off of this low, which I've got as a wave 1, which is the start of a larger sequence. Then we've got a correction of that wave 1, and then we've got a nice powerful rally here and then a consolidation, what it looks like a consolidation here. So I think what we're doing here is we've gone 1, 2, and it looks like early stages of a third wave, which takes you up here. So a little bit similar to what we saw on gold this week, but the Aussie is kind of a little bit lagging behind. So I think once we can start busting through these highs, then we start to see the thing accelerate. And again, this could happen on Monday, Tuesday. But again, I want to be in this move, because the kind of trade that I'm looking for is something like this, where we go up for 2 days solid in one direction. So that's the kind of run that I want to be involved in. Hopefully a kind of repeat of this thing.
Right.
Does that make sense?
Yep, it definitely does. And especially if it breaks that area, right? Like, it should definitely run after that. Yeah,
it does seem to be, if you're short this market, you're a little bit offside, I think. People are kind of maybe selling up against these things, and I think once this starts to go, if it starts to go, nobody knows for sure. But if this does start to go, then we really could see some kind of acceleration higher. And the way the markets have been doing, lately in the currencies in particular, we have started to see some big moves. Currencies, gold, even the stock market obviously has been falling off a cliff lately. So it looks like things are actually starting to move, and it would surprise me if the Aussie and the CAD didn't actually do something fairly soon, because I think we've had this kind of chop, and when volatility dries up as it has done, it usually tells you that volatility is actually going to start to pick up fairly soon. So that's really the way I'm kind of positioned, looking for the commodity currencies to be stronger, particularly against the US dollar, because I've got a big bearish view on the US dollar going forward. Just kind of going back to euro dollar, it's been a little bit quiet the last few sessions. Obviously, we had that massive ramp up when it broke through the euro dollar, when it broke through this big resistance level. So big ranges there, and it started just to settle. So we're doing a bit of chop, and it looks to be some kind of short-term consolidation to me, like a little pennant or something, before we see another thrust to the upside. But I'm not really aggressive on this thing until we can see some decent time spent or a correction. So it looks like it's kind of on hold for a bit, while the Aussie and the CAD, they start to make their moves, as you've seen on your chart with the they look like they're going to break down against the so the Aussie CAD, Euro Aussie, Euro CAD look like they're going down. So that would mean this kind of stops going higher for a bit, whereas Aussie dollar goes higher, dollar Canada goes lower. That's really how I can envision things. But on a bigger picture view, Elliott wave wise again, it looks like we had a major low on euro dollar back in 2022. We had this first leg up, and then this ABC correction. So if you follow Elliott wave, Elliott wave, I always say to people, it's not for everybody. It's very hard trying to figure out, where you are in the cycle and when is the cycle going to finish. But the one thing I will say to people who try to use Elliott wave is all you need to do really is to try and identify the end of a three-wave sequence. If you can find the end of a three-wave sequence like this, then that gives you a clue as to which way the market really wants to go. So identifying A, B, and C. Once you can identify A, B, and C, then you're getting ready for the next move higher in this particular case. So yeah, that's really where I stand on these currencies. Gold, just having a look at gold. Obviously, I was kind of looking for that move, and
gold is a monster
staying
right
away
now.
from gold now for the time being.
It's hitting all-time highs again. Gold
you remember we were looking at on these days here, and I was looking for that kind of ramp up to, and it's blasted. But now I don't really want to touch it at these levels. I'd rather see some kind of correction before I think about entering long. I don't want to sell it, at least not unless there's any real clear evidence on the shorter term time frames. But I'd rather stay away from gold for the time being, and maybe think about buying it if we get a nice down day like we had. These kind of things.
Yeah, or even like if it was to pull back to that, maybe like that area. Exactly. If it was to pull back to that area, then yeah, that would be a good long opportunity.
Oh yeah, I'm sure on the stuff that you look at, you like the idea of a pullback once the market comes back to retest. So I'd imagine that would be a nice pullback, broken resistance turning to support, that kind of thing.
Exactly.
So yeah, so that's kind of where I'm at. Do you want to come back in on some of your stuff again?
Yeah, let me see if I can find. Oh, let me share this again. Oh, okay, here we go. You got to make sure you don't press the leave the studio button.
That's not good.
Yeah, it's so funny.
Yeah, I think I did that yesterday.
Yeah. Like, don't leave. Okay, so let's check these out. It was one more. Was it? I think it was EC. Maybe it was EC.
Sorry to interrupt you. I just see a question on the chat. How do large players manipulate price? And how can I use that to my advantage? So, yeah, for me, I would say really.
Go ahead. You can take the screen back here, Howard, and just kind of give them an example, and then I'll do the same thing.
Sure thing. Okay. Let's see. Just 1 second.
Thanks for the question. And that's definitely a great question, because you definitely want to know what's going on behind the scenes.
Yeah. So I would say, actually, going back to these patterns on gold, I think when we get these kind of big one-day movements against the trend like this, I think this is large players coming in and doing just that. We get a run in the direction of the trend, and then we get a slam down, and that looks pretty bearish. At the end of that day, people come in and they say, "Oh, this is a horrible candlestick. It looks like that's the top of the market." But then in they come the next day, and then they start to resume the move. So I think that's really how the big guys come in, and they take profits, and that sees a session down, and then that gets the shorter term people coming in, maybe the more retail type people that are not looking at the bigger picture, and that's how they can kind of confuse everybody. So waiting for this to happen and then being ready for it, I think that for me is the way to try and play that particular pattern. So that's my thought on that subject.
Great one. For me, right? I think we both can agree that we're kind of looking for where traders are trapped at, right? And then for me, I kind of see this through Asia, right? Like, I'm looking at this stuff through the Asia box as well. So let me go to my 15-minute chart here just to kind of give a better example. So this box that you guys can see right here, this is the Asia box, right? So it pretty much starts right at 17. It's like 5 o'clock to midnight Eastern, right? So in this box, they are accumulating what I call contracts, right? Like, they're setting the highs, they're setting the lows, and you typically don't want to trade in this area unless, if you look to the left, they've already done their work, in essence, right? Like, they've already cleaned people up, they've already activated pending orders. But for the most part, I like to look at what's happening here. Like, I look at this almost like a basketball play, right? Like, I say they come out the box. And when I say that, again, I'm meaning the Asian box, right? So as you can see, this box ends right at 12 o'clock Eastern, so midnight. And after they come out of there, if I'm looking for longs, I want to see them come out of the box and hit what I call hit the stops low right? So, and what that will look like is, let's say I'm looking for loans. I want to see them come out of this box and I want to see them go below it, right? Like do some stuff below this, right? Because once people, there's pending orders that are shorts here, right? There's pending orders that are short. So there's some passive sellers that are saying, hey, when price comes below this area, to go ahead and ping my order on, and I want to go short, right? And market makers, big guys, they know this, right? So what they do is they come out of this box at the end of Asia, and they just do some painting below this Asia low, and then they just rip it away from them. Right? So a good rule of thumb is if you're going long, you want to see them hit the stops low first out of the Asia box. And if you're going short, you want to see them come out of Asia box and hit the stops high first and then rip it away, right? So that's how I look at manipulation, and to see like what are market makers, what are the big guys who are really moving this market, what are they doing behind the scenes that I need to be privy to, right? And it will always be this exact thing. Like part of my checklist on certain setups is they have to hit the stops on the opposite side of the way I'm trying to go first, right? So just to kind of paint like, again, a picture here, right? So it might look something like this, right? And then we'll see them, let's say we're trying to go long, right? So this is, they're all in here, they're doing all this funny stuff, right? And let's say this is the start of Asia, and let's say this is the end of Asia, right? If I'm going long, what I want to see them do, I don't want to see them just go long, right? Don't just do that. That's not good, right? I want to see them, man, I didn't mean to do that. Let me put these back on here. So I want to see them after they're doing all of this jazz, right? And I got the start again. Let's say I got the end of it here. I want to see them do a move like this, right? So again, this is the end of Asia. So I want to see them come down here, right? Do some jazz, some funny stuff, make some type of pattern like a W, and then come up, right? I'm interested in a move like that because I'm expecting them to continue to move up like this, right? I don't want them to just go long, because most of the time when that happens, they end up going up and then they'll come down and hit the stop low and then go up, right? So I'm always looking.
that happens a lot. That happens a lot in every market.
Yeah. Mm-hmm. So that's really what I'm looking for. I definitely want to see them come out of this box. And let me give another example. Let's see. Let's try our Euro USD, right? So I want to see them come out of this box. How it is here, like same exact thing. If you look at this is exactly what I mean right here, right? Because you can see the Asia box is this price, right? So let's see, we make that low here. Trust me when I tell you, it's not a coincidence that they stopped right on the dime right here and then went the other way. It's because they activated traders' orders short. There's a lot of traders that went shorts, right below this price. It's like, hey, as soon as I get here, as soon as it gets here, just I'm gonna go short, right? And they know that, so they come, they hit this area, right? Because people have pending orders on right at this price, so they come in, they hit it right here, right, and then they're out of there. As you can see, these people who went short right here, they're stopped out, because majority of the time their stop loss is right above the Asia high. So as soon as this comes, and as you see this candle breaks right through it, they're done. They got them, basically. It's nasty. It's a nasty move.
Yeah, that happens a lot in most markets. It just seems to be the way it is.
Yeah, because they have to induce, right? Like they have to induce traders to go long and to go short, right? So they're accumulating contracts in this area, right? And then they come out the box. If they saying, hey, we need to go, we're finna go long, we need to take this market long, they don't just go long, right? Unless they have all the money that they need to have, and they're saying, hey, if we ping on these orders below this Asia low, we're going to end up losing money. Let's not do that today, right? Like we already have the orders collected that we need. Let's just take it up, right? But in other scenarios like this one, they say, hey, there's about, let's say right at this Asia low, let's say there's $200 million sitting around that Asia low. Let's grab those. Let's grab that 200 million first, and then we'll go long. Yeah. Right? Nasty game, guys. Like nasty. It's ridiculous.
Yeah, and I think strategy-wise, if you know that and you wait for it and you use it to your advantage, I think that's that can be something in your playbook, really, just to wait for a trap. Yeah,
for sure, 100%. So like for me, they can have a beautiful pattern. If they don't hit the stops high or hit the stops low on the side that I need them to go, of course, I'm not interested in the move. I'm only interested after they've hit the stops high or hit the stops low. So in this particular example, right? And again, this isn't a setup, so I'm not saying I would take this. I'm just giving an example, right? Once they come out the box, let's say I want to go long. I wouldn't just go long. Like I'm looking for a close above the 13, right? So a close above the 13. And really, I'm looking for a close above the 50 as well, because the 13 is nice. But if the 50 is in the way, it can bounce off of that. So in essence, I would be looking for a close above the 50, right, on something like this. And this green one here did it. But I wouldn't take this trade, right? Reason being is they never hit the stops low first. So I need to see them hit the stops low first, which is here, and then close above this 50. And then I'll be interested in this trade going on, right? But they have to, it's paramount that they hit the stops low or high first, right? So I'll just give I'll delete this. I think I can I do this? Yeah, I can do this. Okay. Oh, whoops. All right. So let me scoot this over a bit here. Right. So let's say, right, let's do a short first, and then we'll do a long, right? So in an example of, let's say I want to go, matter of fact, I'll do it like this. So I'll do short, right? If I want to go short here, what I want to see them do, mind you, this box is representing Asia box, right? So just pretend it's Asia. Let them collect contracts all in Asia, right? And then right at 12 o'clock, I want to see them come out, hit the stops high first, and then go short, right? And I'm interested in the move, in essence, right here, right? I wouldn't try to take this peak. That doesn't really work. I'm looking for that. This price will be a close below the 13, right? So as soon as I see a close below the 13, I'm interested in that. And then on the long side, right, same exact thing. In fact, I'll do it a little bit shorter for this one. Right? Let's make it a little bit longer. So in this particular example, same exact thing. Right? And let's say on this one, I'm going long. Right? I want to see them do the same thing, except the other way, right? They're collecting contracts. Remember, this is Asia low. I mean, this is Asia time frame. I want to see them hit the stops low first, make some type of pattern, and then go, right? And once again, I'm interested in the move right here, which would be the close above the 13. All right. So to answer your question, this is, take a screenshot of this if you can, but this is exactly answering your question. Like, how do you know what the big guys and major market makers or movers are doing? Is there's a move in a pattern like this, right? Asia is being accumulating contracts. For shorts, they're going to hit the stops high first because they want you to think that they're going to go long, right? Because in essence, what's happening here is two different things, right, guys? There's people who are long above this order, above this price, right? So there's people who are, as soon as it comes out, they're long, right? They're like, all right, we're long, we're up here. Once people see this curve right here, people start getting short. So now they got traders on both sides, some long, some short. Then they come back up here. Everybody's in a frenzy now. Like, whoa, is this thing going long or short? We have no idea what's happening, right? Then all of a sudden, they yank it away from everybody. The people who are on the right side, of course, they got paid pretty quick. But the people who are on the wrong side, they got into drawdown so quick and probably got their stop loss hit so fast, they didn't even have a time to react. They're just victims in essence.
Yeah, that's the thing. It's just no time to actually get out.
Yeah. Because by the time you're sitting there thinking like, hey, wait, what's going on? What's happening? Like the damage is already done. Like you're gone already. Or you're so far into the negatives that it's so close to your stop loss, you just hang on to it at this point.
Yeah. And I think that maybe that's the beauty of actually always having a stop in the market, so that if that kind of thing happens, you're going to be taken out. You're not going to be sitting there wondering, why is this happening, and watching the balance go down, all the rest of it. Always have a stop in the market, I would say. Exactly.
I always need to stop in the market, and I always have a plan before you get into this market. Right? Because if you're just wondering, you don't want to be in a scenario where you're like, oh, what am I doing? What am I doing? You're supposed to already know what you're doing. You should already have a plan to get out, close it, whatever, hey, I'm still within my, trading plan, whatever that may be. You still need to have that understanding, right? But at its basis, this is what that movement would look like, right? Believe it or not, guys, this is on my desktop screen. Like if I were to cut my monitor off like the sleep screen, it's a picture of basically this, right? So I can always know, like, this picture and this pattern is ingrained in my brain, like for all eternity. But in essence, any short guys, you want to see them hit the stops high first and then go short. Any longs, you want to see them hit the stops low first and then go high, right? And this is just my way of looking at it, obviously. Just want to kind of break that down for you.
Yeah.
I hope that answers your question. Yep. If that did answer your question, let us know. And if it didn't, please let me know as well. I can kind of clarify it a bit further.
Great.
All right.
Yeah. I got something just interesting coming across on the stock markets, just out of interest.
Nice.
I know they've been free falling lately, but today looks like the first signs that maybe things are slowing down a little bit. Let's just have a quick share that one. Okay. 1 sec. Let's just have a quick look at the S&P 500. So, yeah, interestingly enough, has it come? Can you see that?
Yes.
Excellent. Interestingly enough, just looking at the daily candlesticks, we're starting to see that kind of bullish thrust type action, which we were looking at before on gold and euro yen, all that kind of stuff. But obviously they were in kind of bullish environments. But this is obviously a bearish environment. But interesting to see after this big move down, and at the end of the week. So maybe people are a little bit nervous that something good can happen over the weekend. That could be interesting from a kind of a basing idea. Not saying that's the end of the bear run, but it's the first time we've seen something I think fairly encouraging after this big long move down. So we kind of basically busted through the top of yesterday's range. We're holding up near the session highs. So, and also we've got this kind of support down here. So it could be early signs of something to the upside. So I'm not a massive bull by any stretch of the imagination, but but sometimes no trend goes on forever. That's the thing.
Right, and it's a little early for the bulls right about now with this market.
Yeah, exactly. But maybe if you're short and you've participated on this breakdown, might be worth taking some profits off the table and thinking about maybe going long. But obviously, we want to see what happens over the weekend, and maybe on Monday if we start to get something basey, then there could be something into next week. But it's just early signs. they call it green shoots of recovery.
Nice.
NASDAQ as well, I think a similar kind of idea, where obviously we've been, we got that double top thing, we broke down, and then obviously same kind of thing where little bounce, retest of the low, and today we're starting to, we've retraced all of yesterday's session down. So again, it could be early stages of something to the upside. So just something to keep your eyes on, and maybe think about going long early next week if it holds.
Right. Yeah, I can kind of see the start of it as well. There's a few things that I would want to see it in play first that will kind of like solidify that. But yeah, I could see that also. Yeah,
I mean, it might be one of these things where you come back and look back in a month or two's time and say that was the low, just like it was here. It is possible. It is possible. So I guess if you're bullish on a longer term basis, then this could be perhaps the first signs that maybe you should take a little stab at it from a long perspective. But early days, but encouraging. This is the first time in a long time I've started to look a bit, feel a bit positive about the stock market. So I don't know what that tells anybody.
Right.
Yeah, maybe it's going to continue to go down. That's that. I guess on the cryptos as well, that they've been following the stock market lower. Bitcoin, a similar kind of idea there, whereby yesterday it was looking quite bearish to me yesterday, but now we've kind of again erased all of yesterday's decline, and there's that big support level down here. 70, just above 78, I guess it is. So again, who knows? Could be early stages of something positive to the upside. So let's see what the weekend brings.
Right, you never know.
What other markets do we look at?
So yeah, I can share really quick what I think I would like to see.
Go for it.
See on there. And they're kind of all the same, right? Like, let me get all this off. So, NAS 100, S&P, they're kind of all the same. They're in this like, really, really. Oh, this is on a 1 hour. So yeah, this is pretty low, right? But like I always point out, right? So let's do it the other way around for the W, because this will be pretty evident, right? I'm looking for that move.
Yeah. So let's get the upside breakout and then the pullback.
Exactly. That's exactly what I would look for. So I can tell that. Let me scoot this over. Right. So firstly, I have this, it's ugly, but there is some type of, it's really ugly, but this is in essence like a peak, right? This entire area for me is a peak. Like this is peak low. Now it stops right here. This is, well, let me put this a little bit higher. This is pretty much the high, but it stops right here because I have this 1350 cross, right? So as soon as I see this 1350 cross, I know that the pattern is locked in and there's a lot of trap volume, I would say, here, right? So in essence, they really don't want to go much below this price because this is where the trap volume is. Right? So they got a lot of traders who are short below this. Like right below this most recent low here, right below this price here. I'll just do it like that. Anything below that line, they're not trying to go back to this. There's a bunch of money sitting down there, and they would really like to keep hold on to it. They don't want to let that go, right? So from here, as you can see, I got that 1350 cross. What I want to see is price come up. I don't want it to touch the 200 because, like I always say, I want to ride the wave to the 200 the first time, not the second time. So I would like for it to come up here, right? And then I would want it to come back, bounce off this area, and then go to the 200. And I will be interested in that move, right? Because that move is this move, right? Which is my, oops. Which is my level 1. Right, same exact thing right here. Right, so I would only really be interested in the move after that. That would give me a strong bias, and then additionally, my market baseline would be going up. It would be you see it's below the static right now, but it would be above it in that direction, and then this RSI line would come down and bounce off of that as well. Right, so I would get all of that motion to happen in one, basically. And again, as I always like to point out, that is my market maker structure, right? Like that's what I want to see. I wouldn't be interested in longs until this happened, like not at all. But yeah, I would want to see them dip back into that area and then go ahead and run up.
Yeah, no, that's good. Yeah, you got a plan. You got a plan. It's nice.
Mm-hmm. And of course, I would want to see, which it already is actually, as long as my price is above the 13 here, which it is, as you can see, then it's, I got my 4-hour confirmation. But yeah, as far as entries, yeah, that's what I'll be looking for. Like this is definitely the peak. That's why it's not really going any lower than this. And again, I can't say definitely. Let me take that back because Sunday it'll go lower. You're like, I thought you said it was the peak.
Yeah. Never say never.
Right. So to me, this looks like the peak. This is in level 3. That's why we got this rangy motion here. If you look at it, we were down. Now we're not really making lower lows at this point. So it's definitely slowing down. And as you can see also from the market baseline standpoint, right? Like we got this market baseline is pretty far away from the static, pretty far away, but now it's kind of trending up, and it's now right here, right? This is as high as it's been since it's going down, right?
Yeah.
Like right here at the brink of crossing this static line to start going to the upside. So yeah, definitely can't just grab it right here. Definitely got to wait because this is what I used to do, right? This is why I say I don't take the peaks anymore. I don't try to time this. So I wait for this pattern to be locked in. And for me, what locks in that pattern, like I always say, is this 1350 cross. Once those two things cross, these two EMAs, this locks in this pattern for me. And I can nearly confidently say that, hey, like as of now, this is the low. That's the low. Anything below this price, right, is really trap volume. Well, this is I wouldn't really call it trap volume. This is actually a nice support or resistance area. The trap volume is below this, right? Anything below this is trap volume. So anything below this yellow line, all of this is trap. They got billions of dollars, trillions maybe, of traders trapped going short right here. They're not trying to come back and get that and let them out. Because some of them aren't just closing their positions, right? Some of them are holding it. And they're just day by day, minute by minute, it's just getting further and further away from them. And then it'll probably, right, come on back and give these traders just a little bit of light and like, oh, it's coming back. But it never really does. It just takes back off the other way. And like,
in fact, they might even want to sell some more.
Yeah, exactly. Like, I knew it. So
I knew it.
That's how I look at that. But yeah, that's why I don't trade peaks anymore. And the same thing for all three of them, right? Because S&P, US 30, as you can see, and NASDAQ 100, they all look the exact same for the most part. So that's the only thing I would be interested in on any one of these three pairs.
Yeah. A nice breakout and then a pullback.
Exactly. And then on gold, since gold is ridiculously high, I wouldn't touch this with a 50-foot pole, right? I would definitely need to see this coming on down. Same thing here. So we got like a cross, right? We have something like this, right? Run and then a touch going here. And I'm interested in this move, right?
Sell it,
Yeah. Same thing here. Market baseline will be going down, right? The RSI line will be going down too. And then at one point it will come back above it and go down. I'm interested in it when it does that. These two things will happen at the same time. If it looks like that, I'm all over it. If it doesn't happen, crickets. I'm not doing anything.
No, I'm kind of it's done its move as far as I'm concerned. I'm just waiting. I think it needs to spend a bit of time here, and with the time we can see how it acts, and hopefully there should be some opportunities once they show their hand a little bit.
Right, definitely got to be a little bit more than what it's doing.
One thing I've actually, while we're talking about the stock markets and the Aussie, the CAD, and the Kiwi, one thing, can I just quickly dive in? One thing that I've noticed, even while we're talking, actually, I was just looking at the stock market decline. Has the chart come through? Can you see that?
Yep, it's here now.
Great. So the top of the market, February 1920 on the S&P, the all-time high. Okay. So that's pretty much when the market's topped out. The stock market topped out. Then if we go across to Aussie US, and we know that the euro has exploded higher, but looking at the Aussie, so it's basically started to underperform since the stock market topped out. So February 1920 here. So the Aussie has really been holding back while the stock market has been falling. So if the stock market does base out, then this would actually tie in very nicely with a scenario whereby the Aussie and the Canadian dollar really start to ramp up against the US dollar, and also maybe against the other currencies too, because they've really been holding back, I think, while the stock market has been falling. So they've been hit. They've not enjoyed the rally that, say, euro dollar and sterling dollar have enjoyed. So it's just an observation where sometimes you can see things in different markets. And if the stock market is about to make some kind of base, or even just to stop falling for a while, that should give a bid to Aussie US and selling for dollar CAD. Again, just looking at dollar CAD on the daily chart. If you remember February 1920, the top of the stock market, that's kind of here. So the stock market has been falling while dollar has been rising pretty much against the Canadian dollar. So again, should the stock market base, then this could be conducive for there could be a catalyst for dollar Canada to start to go much lower, which I think it should. Which the technical picture is such that it looks like it wants to go lower, but it just needs some kind of trigger.
Right. No, I can definitely see that.
Yeah, so interesting how you can see something in one market, and it kind of underscores a view that you have in another market. It's so sometimes it is good to kind of. I always say people put the blinkers on when you're trading, but sometimes it can make sense not to do that. Yeah, just an interesting intermarket relationship. So should the stock market start to rally, then watch out for Aussie dollar, Kiwi dollar, and dollar Canada to start to join the party for a weaker dollar.
No, I agree. I agree. It's kind of how what I just showed as far as US 30, S&P, NASDAQ 100. Even though they kind of like are closely, sometimes they won't fully set up, right? Like they might be kind of close. I think maybe one day that it's sometimes it's close, right? Even though they're all correlated and they're very close together, only one or maybe two might actually give you the full confirmation of what you're looking for.
Yeah.
That's always super interesting when it happens.
Yeah,
Like I tell
agreed.
traders, make sure that it actually confirms, right? Almost doesn't count.
Yeah. No, confirmation is always better than not.
Yes. I saw something yesterday. It was like just you want to sit by if anything. But cool. We still got like 10 minutes here. Actually like 15 minutes. I hope we answered your question. I don't want to butcher your name, so I won't say it, but hope you got your question.
Yeah, no other questions. No other questions coming through.
No, I don't see any more just coming in. I wonder if they got that screenshot. I think I explained it to them pretty well for them to be able to take advantage of it.
Yeah.
I'm hoping.
Do you see anything on crude oil?
Let me see. No, I looked at crude today. Crude's been really, really funky. Let me share my screen here. Crude for me has just been going lower and lower and lower, right?
Yeah.
Yeah, this thing is a monster. It's just been lower, lower, lower. Yeah, I wouldn't know what to do with this one. I would be a innocent bystander on this one.
Yeah, I must admit, I'm the same. I don't really have a strong view. I just wondered whether you saw anything special there, but I can't make too much sense out of it at the moment.
No, it looks ridiculously funny to me. Like if I were to mark this up, the last thing I would see is, as I always mention, I got my 5200 cross here, right? So the next thing I would be looking for is a M pattern off the 200, which you kind of see that here, right? Yeah. And then going short, I got this outside the band. As I always mentioned, I have the RSI line. I'm sorry, the market baseline going above the static line. So I got a nice, got a nice reload here. But yeah, if anything, you would have been short here because you got that pattern off the 200 and stops will be above here somewhere.
Yeah. Is it doing a similar kind of thing now, would you say? It's kind of tested the 200, then came back and maybe.
Yeah. So for me, funny thing is, and that's a great observation, Howard. Great observation. So for me, right, after this 5200 cross, I'm actually only interested in the very first time it does it. Now, this is a second M off the 200. I'm not interested in the second ones. I'm only interested in the first.
Yeah, it might be late stage kind of thing, late stage of the cycle.
Yes. And just from my data and everything I've gone through, the second, right? Like, let me just kind of right here. So this is the first M off the 200, right? And then we got the second M off the. Seriously, that's a great observation. Obviously you're a professional, so of course you caught that. But yeah, I mention this all the time. Some traders are like, well, why you can't take this one? And I'm like, guys, once this 5200 crosses, right? You're only looking for the first one. Only. If I was to put it into numbers, this is much higher probability, right? So we're talking about anywhere from 60 to, let's say, 75% chance of working, right? I really don't, to be totally honest, I don't even have data. Like I don't even pay attention too much to the second one, but I would surmise that it's much, much less. So let's say maybe 50, and I'm being generous, right? Maybe 50 to 65% chance of working. right? So that's just, I'm just not interested in that. My strategy when I give you that number 4, when I say the M off the 200, in theory, I'm only referring to the first M after the 5200 cross. The second one is questionable. It's much more dicey than the first one, right? Like my edge isn't fully there how it is for the first M off the 200. But freaking great observation to even notice that.
Yeah, might be interesting. Yeah, if it starts to break down, but as you say, it could be like a final push lower. Who knows? You know, it's been going down for a while.
Mm-hmm. And even then, like even if it does, I mean that's fine. I just call them like outliers, right? Like if you have a strategy that's, you know, let's say 70%, that still means that out of 10 trades, you're still going to lose 3 of them, right? Yeah. And out of those, let's say a few of those that you didn't take that were supposed to go, 1 or 2 of them might still end up going, right? Like, but you don't want to reinforce that bad habit and say, hey, you know what, man, like say this is a perfect example. Like say if this did go and it made the move lower, like I wouldn't base my bias and start saying, you know what, I'm going to start taking the first and the second M off the 200. That just wouldn't be wise to do. Right? Because this just might be one of those times where, hey, again, I call them outliers. Right? This could just be an outlier. Like, hey, this actually went. You know, this did end up going. But more times than not, it won't. So how my strategy, let's say if the strategy is 70%, so you're going to win 7 out of 10, right? And lose 3. This turns this other way around, right? Out of 10 trades, it's still going to be 3 of them that is going to go, and you're going to lose the other 7. But don't base that off, hey, 3 of those went. You know, like it's that old adage of like, hey, even the broke clock is right twice a day, you know, type of thing.
Yeah, you want to pass on low probability stuff, really, don't you?
For sure, especially in this industry, right? Like you really can't afford to be taking anything less than high probability setups. Save yourself the headache, save yourself the disdain, save yourself the money, right?
Yeah, I mean, there's plenty of other markets, plenty of other time frames. You know, there's always something. You know, if you're looking for the first pullback after the breakdown from the M or the W, there's always going to be something. So yeah, why go for something which is late stage and maybe it works, maybe it doesn't. You know. Yeah.
And then that begs the question: well, if there was a third M, do you take that one too? All right, like, like no. I mean, at that case, you would imagine if there was a third M, that one probably be closer from 40 to 55%. It's like every time the M presents, the probability just getting lower and lower and lower and lower, right? So
yeah,
I just stay away from those.
Yeah, it's an old proverb. You can't go to the same well, you know, more than once or twice, you know.
Exactly. Like, hey, you got to let it go, right? As they also say, the market has unlimited opportunities, but your account, you know, you don't have unlimited L's. Like you need to manage it the right way. And with that is obviously taking high probability setups, as you just mentioned. So 60, 75, that's great. I would take 60, 75% chance of working any day of the week, right? Except Sunday, right? But yeah, 50, 65, now we're getting into that gray area. I don't like 50-50s. Like I don't like that. If I'm gonna do 50-50, I might as well go to the casino.
Yeah, and even then it's kind of stacked against you anyway. So yeah,
exactly. So yeah, I just tend to stay away from that second one. It happens often. Like it literally, they'll make this second, third, you know, fourth W several times.
Yeah, I guess just a similar analogy when you think about something like Elliott wave, where you get you know, three waves in the direction of the trend and 2 kind of waves against the trend. It's good to know what the cycle is. You know, if you've had like say 3 waves in the direction of the trend, why go for 4 or 5? You know,
Right.
the probability is you're going to get a correction at some point. So it's having that knowledge that there's only so much that a market can do before there's a natural pullback.
And you don't want to be pulling it back while you're in it.
No. Yeah, and afterwards you say, "Oh, I knew it. Why didn't I follow that?"
Yep.
That rule. It's like I knew that there was only going to be so many moves in the direction.
Now, here's a great example once again, right? After the 5,200 cross, it's the first M. This is kind of funky, but it's the first M that works, right?
Yeah.
Stops above, entry below the 13. TP's probably down here somewhere, but it's the first one. It's always the first M after the M pattern, right? And in addition to it, always remember you still need that reload on your TDI, right? So how this starts here, market baseline goes back above and goes back down. This little area here, right, is my reload, right? This is where they're reloading contracts once again, like coming back above, pinging on those long orders, coming back down, reloading.
Yeah.
Right. So I'm always only interested in this first one, nothing else. Now this one didn't give you a second anyway, but like it just totally went the other way. But yeah, that first one is gold, right? That's why that's one of my setups.
Yeah, as I like to say, you go from oversold to undersold, and when you become undersold, that's when you've reloaded.
Right. You don't want it to happen again. Why it's with you? It always sucks. But yeah, once again, great observation. It's definitely super close to happening. Well, cool. I think that's about it for today. What time is it? Oh, yep. Right, pretty much right at time. Oh, okay. Not sure what that is. Clown face. Cool. Yeah. Well, cool. I think that's about it for today, guys. Hope you guys got some valuable insights. As always, if you got any questions, please let us know, right? So write it down for next session and we'll get to it.
Sounds good to me. Have a great weekend, everybody. Huh?
All right. Have a great weekend, everybody. Stay safe out there.
Take care.